Welcome to what? Tell me. Our first what revision batch, right? Last day revision, final day revision, जो बोलना है, correct? I would request everyone to please on their cameras. I can see your beautiful faces. Let me see how students look. Some are old students, some are new students. Some people know me, some people don't know me, right? चलो आ जाओ जल्दी. Quickly join in. So what we are going to do in this 8 hours worth of lecture? बराबर है. आ जाओ एवरीवन, ज्वाइन क्विकली ऑन योर कैमरास. चलो 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 क्विकली. ताहिर इज देयर, आनंदा इज देयर. क्विकली चलो. जसराज, आशिका, विरति. A lot of you know me, a lot of you don't know me, right? Right. So you have taken some classes with me, have not taken classes with me, correct? So one or two things before we start this lecture, right? What we are going to do in these lectures, 8 hours का time है, and we have a what big task ahead of us, right? What is the big task ahead of us? Tell me. Completing the whole UK tax portion, right? Chalo, Sneha is there. Sneha, Tajun, Manav. Chalo. So we have a big task. 8 hours में full UK tax revision. I don't know whether how your preparation for UK tax is, correct? But if your preparation is, let's say 40, 50, 60% also there, right? Then this class will take it from 60 to 100%. I don't know how you have studied, where you have studied, what you have studied. Okay. If you have studied with me, so then I know how things are, right? But now let's talk about one or two things before we start, right? One is I have my own handwritten notes written with me, correct? So those notes, I'll provide you those notes, right? So I have divided the class basically in two parts, right? So what are the two parts? Let me just explain. People have joined in. So first, before I start, how many of you know me? How many of you don't know me? How many of you don't know me? Let me introduce myself first before we start our UK tax batch. How many of you don't know me? Tell me. New people. A lot of you have studied with me, right, before. So let me introduce myself, right? My name is Chinmay Shah, correct? I am an ACCA tutor since last 3 years now. I have been into the industry working for around 10 to 11 years, correct? And then I'm doing full-time teaching since year 2021, 22, correct? I have taught almost 30 odd batches of FM and 10 to 12 batches of what? Your UK tax. AFM I have taught 4 to 5 batches. MA I have taught around 4 batches, right? So this is my small profile, correct? I have been into the industry for quite a long time. I've worked with major players in the industry, right? And this is my own startup now, right? So this is a free class. I always, whenever I taught, the students who learn from me know that I've always talked about a 8 or 9 hours, my full what subject revision, right? So I hope whatever we are doing right now in this 8 hours, right, is going to help you. Yes, Hina, you want to say something? Now, see, in the class, you are allowed to raise your hand, you are allowed to ask questions. But looking at the time frame that we have, correct? I would much appreciate that I have 4 hours. So, for one or two things is, let's say we start right now at 9:15, we have started. So, around 10:30, 10:40, I'll give you a short break, right? Now you cannot expect me to go into detail of every what concept that is there, right? So every concept that is there, I cannot go into the detail, but I have certain questions also. I'll also give you what these notes. I'll show you the notes as well, right? With my 10 or 12 batches, whatever experience I have, right? I have created handwritten notes, right? These are the notes. These will be provided to you. No worries. I hope the notes are visible. Have a look. These are around how many pages? Have a look. These are around 352 pages, right? This is what, how much volume we wish to cover on first day, right? Today we wish to, now see, your syllabus is basically what? Tell me. Your three taxations, correct? Individual, corporate taxation and chargeable gains. Inheritance tax and VAT. This is how I divide your F6 UK tax portion, right? So how do we go about with is the question, right? Just a second. Yeah. So how do we go about with it? Now see, I have 4 hours. See, major bulk portion, right? Now where from where section A will be asked, from where section B will be asked, from where section C will be asked, right? My recommendation, if you ask me at this 11th hour, if you have to make a strategy for studying, correct? What would the strategy be? Simple and sweet. Strategy has to be very simple, very straightforward, correct? The strategy is very simple. Individual taxation means what? Your employment income, self-employment income, correct? Capital allowances, property and investment income, other chapters like pension, partnership, trading losses, and tax admin of individual, right? Consist almost 50% of your portion, right? And likewise, marks also would be those many only, right? So if you ask me where to focus, individual is the stuff where you focus. If let's say you did not have a lot of chance to revise, here we'll go individually quite slow, 4.5 hours today, whatever 1:30 we can go ahead, right? We'll do individual taxation. Then we have something called as corporate taxation. But if you ask me, section A can be asked from anywhere in the syllabus. All the 5 heads are open, right? So they can ask anything from any of the 5 portions. Section A, I cannot do a lot of predictions, correct? But when it comes to section B part, so now I don't know whether you know, but if you don't know, there is a problem. How the paper would be judged. Section A, you have miscellaneous MCQs, 15 MCQs of 2 marks each. Section B, you have case study based question, correct? So 3 case studies into 5 MCQs, correct? Into 2 marks, 30 marks. And here 30 marks, 60 marks. Your section C has 2 questions, 15, 15 and 10. If you don't know this, right, you can write it down, or you will be getting these notes. You can refer from these notes. Now in the section C part, generally, if you have given other papers in your skill level, you would have seen that was some or the other where, right? You have what? Tell me. Theory part. But here in your UK tax, application based theory is there. No direct theory will appear in exam. And it is not me who's telling. The ACCA examining committee has said so. Nothing from my end. ACCA examining committee has taken the plunge and told you that was 15, 15, 10 will be the breakup. And theory generally will not be asked, right? So this is how your paper is. Then 5 parts of your paper. If you ask me, individual taxation is the bulk of your portion. So if you ask me, sir, first what we should complete, individual taxation is the way to go. Then you have something called as IHT, that is inheritance tax. Then you have something called as VAT. If you do these 3 portions, no, around 70 marks, 70 to 75 marks worth of portion is done. Trust me, IHT and VAT, the see, ACCA says that section A and B can come from anywhere, but my prediction, right, which has been right most number of times, that IHT and VAT are questions that will appear in your section B 100%. One case study will appear in what? Inheritance tax and VAT. 100% what? There are chances. At times you would have seen one IHT, one VAT and one chargeable gains. Three questions from section B. But let's not be too optimistic. Okay. One question from IST and VAT can come into your section B. 100% guaranteed. Because from this section C cannot come. So then section C, as said by the institute or said by the ACCA, they are saying that section C will logically come from these two parts. Your individual, corporates and chargeable gains are the portion from where section C will come up. If you ask me, one employment question, section C mein 100% you will see. One employment question 100%. So employment income, if you do, you are assured of minimum 13 to 14 marks worth of one section C question. 100% appears in exam. 100%. Not more, not less. One self-employment or corporate taxation question appears in exam. Third question is always a mix of maybe losses, your what? Tell me, pension or something of that sort. So this is how the paper goes. I don't know whether you knew all these hacks, but this is how things work out. Have a look. Any doubt on this? Tell me. Anyone who does not know any part of the portion has doubts about the basic portion. Tell me. Now is the right time to ask. And in my class, it's an open room, correct? It's not something where I will tell you that boss, you cannot speak or anything of that sort. You can speak in the class, right? Any doubt? Or can I go ahead? Right? Quickly, let's go ahead. So now sequence generally individual, I've told you, right? For revision purposes should be individuals you complete first, IST you complete next, VAT you complete third, corporate taxation fourth, and last chargeable gains, right? The same sequence will go where? Tell me, in your class also, right? So now these are the basic notes. Pound is the currency. Now I think HMRC, the full form is His Majesty's Revenue and Custom, is something I think up to now you should know. Individual taxation will happen on tax year concept. On what concept? Tell me. Tax year concept, right? I hope everyone knows what is tax year. What is a tax year? For your applicable exam for March 2025, last attempt for tax year 23-24, right? After this, the tax year will change, right? Tax year 23-24 will start from 6/04/2023, go to 5/04/2024. So before starting, are you okay with the basic stuff? Any problem in the basics that we have talked about? Tell me. Anyone who feels that don't know how these things are going to go, right? Can ask any doubts, right? Tell me.
So where we'll find these notes?
When will, okay, I'll post it up in the group. No worries.
Okay, fine.
Yes, you can see, you can keep your cameras on. In case you have any problem, you can raise your hands, right? I'll take up the doubts. Just that if I'm in a rhythm of revising, if you have any doubts, much appreciated. Ek bar, once I'm done with the rhythm, correct? Then you ask your doubts. It will be okay. Is everyone okay? Comfortable? Tension free? Can I start? Tell me. Now see, I'm going through very basic stuff, right? What is exemption? What is deduction, right? Exemption means what? Now see, the income is not taxed at all only. That means whenever that income is taxed in your computation, correct? You will write zero amount because that income is not taxed only, right? In your syllabus, there is something called as, if you don't know, you should know. Employer contribution to occupational pension scheme is an exempt what? Tell me, income. Exempt income means what? Sir, even if it is paid by employer to the HMRC or to, not to the HMRC, but the occupational pension scheme, right? It will be taxable. Will it be taxable in your hand? Not taxed at all. It is completely exempt. Deduction. What is deduction? Tell me. The income is taxed, but it is a deduction from your income because you are paying employee contribution. Employee himself paying deduction, but employee himself paying to OPS. Employee or employer paying on behalf of the employee in what? Tell me. The OPS is a exempt income. There is a small difference between exemption and what? Deduction. Have a look. Exempt and deduction. from your salary deduction happens. So going ahead, income implication, you have two things in income. One is income allowance, that is what? It is a reducer. Example, you have a personal allowance. If you don't know, you should know it, correct? Personal allowance, and there is an income charge, right? It will increase your tax income. That means any employment income and all those are what? Charges to your income that increase your tax income. Then coming to the tax implication, there are going to be certain tax allowances, like you have a marriage allowance, right? It will reduce your tax liability. Tax charge, it will increase your tax liability. You have your child benefit tax charge. These concepts are very important and need to be known. Then you have very important, on the first day of any class that I take, right? What do? I take up this computation of income tax. I make you write every time, right? So the computation of income tax says what? Tell me. You have first your three columns: non-savings, savings, and what? Tell me, dividend income. And then you have the total column. So you have trading income, that is self-employment income or TATP, correct? Then you have your employment income, property income. All these are, see, whenever there is an active function that you are doing and you are earning any income, that will be a non-savings income. When you are not doing any active function and from your investments you are getting your money, right? That would be classed as savings income or dividend income. Hence, taxation happens differently on all these three incomes. NSI is directly taxable. SI and DI have some nil rate bands. I hope you all have heard about it. Then you get, add all these incomes, you get what? Total income, correct? And this is called as, generally I call this as what? Checkpoint one. Generally in question, if you don't read the question properly, question may say checkpoint or total income, or second is what? Tell me. Second is what? Tell me. Your second is checkpoint two. Have a look. After total income, you have something called as two
Net
deductions.
income.
What are the two deductions? Loss relief and QIPs, right? Then you have nothing but the net income. Net income is nothing but checkpoint two. This is how you remember things, right? This is how you retain things in the long term. So loss relief is what? Whatever trading losses that you have, right? Those loss reliefs will be available, correct? Then you have qualifying interest payments, correct? QIPs. Then you have what? Net income, checkpoint two. From that, personal allowance will be deducted. You will get taxable income. Taxable income is checkpoint three. So total income, net income, taxable income. Total income, net income, taxable income. Total income, net income, taxable income. From total income to net income, you go. You have two things that are deleted or deducted: loss reliefs and QIPs. From QIPs, you will get what? Net income. Net income, you have minus personal allowance. You will get taxable income. From taxable income, you calculate tax liability, taxing NSI, SIDI, right? You get the tax liability. From those, any tax charges are there, it will increase your tax liability and minus any tax allowances. And also, if you have any what? PAY, pay as you earn, correct? If your employer has deducted any PAY, correct, or tax paid during the year, right? That will be tax payable. Any tax that you pay during the, you generally pay what? Payment on account, right? We are going to what? Revise that as well. So first thing, coming to the taxation. If total taxable income, now when I say total taxable income, am I talking about checkpoint one, checkpoint two, or checkpoint three? I am generally talking about checkpoint three. So whenever in total taxable income, right, you have NSI, SIDI, correct? NSI, SIDI. And if the total taxable income adding NSI, SIDI, right, is between 0 to 37,700, you are called as a basic rate band taxpayer. What are you called? So let's say my total taxable income including NSI, SI, DI is 25,000. I am a basic rate band taxpayer. If my income is between 37,701 to 125, 140, I am a higher rate band taxpayer. That means my NSI, SI, DI all added together is 75,000. I am a higher rate band taxpayer. And if it is more than 125, 140, right, I am called as an additional rate band taxpayer. I don't know whether you know this, but this is how the basic foundation of what taxation is, right? Are you okay with this? These are the type of taxpayer you are. Then, now, sir, taxing individual income, because it is what? This income, this income, this income, right? So, taxing what? Tell me. The income that is in hand, right? So, have a look. So, how does it work out? If total taxable income, in your total taxable income, the component of NSI or non-savings income If it falls within the first 37,700, correct, it is taxed at 20%. If it falls within, so let's say I have 25,000 NSI only, 25,000 to 20% directly taxable. 37,701 to 125, 140. Let's say my NSI is 75,000. First 37,700 at 20%, remaining part at 40%, right? Then let's say my NSI, only NSI in my income, correct, is 150,000. First 37,700 at 20%, 37,701 to 125, 140 at 40, and more than 125, 140, whatever it is, it will be taxed at 45%. Have a look. You may have examples here as well. Have a look. I have talked about the examples. Have a look. You can draw a timeline approach. A timeline approach is very well to go with, right? Additional red band taxpayer, what type of taxpayer you are, right? Then coming to the part savings income. In savings income, there is a concept called as what income, savings income is taxable, what savings income is exempt. So bank interest, building society interest is basically cooperative banks or small banks that are working, correct? So you do what? Tell me. Taxable and exempt. So taxable is bank interest, building society interest, interest from gilt-edged securities, government-backed securities. Even interest accrued concept will apply on gilt-edged securities, and interest from quoted company loan stocks. But exempt incomes are what? Interest from national savings and interest certificate or investment certificate, right? National savings and investment certificate. Take care that there is a concept of also ISA, individual savings account, right? Don't confuse yourself between ISA, because there was a one question asked in exam which said what? That was interest from national savings and investment certificate, NSIC, right? Interest from what? NSIC, they generally write. Interest from NSIC account is not exempt. There is nothing called as NSIC account, right? Premium bond winnings, generally bond winnings or premium bond winnings, whatever it is, both the words are used for what? Tell me. Exempt incomes. Savings income is completely what? Exempt. Then going ahead, if SI, now see, you did NSI ka taxation, now SI, correct? If SI falls in total taxable income between 0 to 37,700, 37,701 to 125, 140, or greater than 125, 140. If savings income falls within the first 37,700, correct, then it will be taxed at 20, 40, 45. But it is subject to what? Tell me. All the three subject to two things: savings income nil rate band and savings income starting rate band. Savings income nil rate band says that first ask yourself, correct, if what? Taxable profit, or if type of person or tax payable or tax person is he a basic rate band taxpayer, higher rate band taxpayer, or additional rate band taxpayer. If he is a basic rate band taxpayer, that is his total taxable income including NSI, SIDI, right, is less than 37,700, then the first 1,000 of the savings income will be taxed at 0%. If he is a higher rate band taxpayer, the first 5,000 is taxed at 0%. 5,000 or 500? 500 is taxed at 0%, correct? If the taxpayer is a additional rate band taxpayer, TP means taxpayer, ARBTP means what? Additional rate band taxpayer. No NRB available to him. Also, there is a savings income starting rate band. If savings income falls in the first 5,000 of the taxable income, total taxable income, then tax is at 0%. Can both the things apply? Yes. Savings starting rate band and savings income nil rate band, both will apply, correct? In a situation, can they apply? Yes. That means in the first 5,000 of your total taxable income after your NSI. So taxation has a rule. First NSI will be taxed, then SI will be taxed, then DI will be taxed. Have a look. Preference of taxation is what? NSI, SI, DI. Savings income nil rate band on type of taxpayer you are not, and not where the SI falls. That means, have a look. Now see, here in this case you have 25,000 NSI, SI is 5,000, total is 30,000, right? So now 30,000 is your total taxable income. So logically you are a basic rate band taxpayer. So savings income nil rate band applicable to you is 1,000, correct? Then let's say 36,000, 5,000 and 41,000. Now here have a look. Savings income, a bit it falls in what? Tell me. Basic rate band, and a bit it falls in the higher rate band. Where it falls is not important. What type of taxpayer you are, that is important. Higher rate band taxpayer, right? You have a savings income nil rate band of 500. Now that 500 where it falls is not important. First 500 or first 1,000, whatever it is, will be taxable. Then when it comes to savings income, what? Starting rate band. Whenever savings income, or that means NSI is less than 5,000 and savings income falls within the first 5,000, have a look. NSI, have a look. 1500 or year, you could see. NSI is 2000, 25,000 is savings income. So what is happening? In the first 5,000, 2,000 is NSI, 3,000 is SI. That will be taxed at 0%. Over and above that, check out what type of taxpayer you are. Basic rate band taxpayer. Okay. Then you will get over and above that. Oh, after that 3,000, more 1,000 taxed at 0%. This is how you solve questions. Make a timeline when you are calculating what? Taxes. Then comes dividend income. Dividend income will be taxable after what? NSI, SI, and then DI. That is dividend income will be taxed. So dividend income falls in the total taxable income between 0 to 37,700, 37,701 to 125, 140 or greater than 120. If it falls within the 0 to 37,700, it will be taxed at 8.75%. 37,701 to 125, 140, it will be taxed at 33.75%. Greater than 125, 140, it will be taxed at 39.35. But subject to dividend, nil rate band of 1,000 at 0%. Sir, no basic rate, higher rate, and what? 1,500, no. Up till last year, that is for tax year 22, 23, this was 2,000, which has now been changed to what? 1,000. Correct? Irrespective of type of taxpayer, right? So, wherever dividend income falls, the first 1,000 will be taxed at 0%. Have a look. So, you have NSI, SI, DI. So, 3,000 NSI. So, SI falls in the first 5,000, correct? Then you have what? Over and above that, you have savings income nil rate band as well of 1,000. Then dividend after it is taxed. But dividend, will it be taxed at 20, 40, 45 or 8.75, 33.75, 39.35? 8.75, 33.75, 39.35%. Are you okay with it? This question, if you do, right, all the concepts of savings income, dividend income, nil rate band, and your NSI, SIDI taxation can be easily what? Revised. So with this you can solve. I have given a lot of questions here. You can try and solve the questions. Then coming to, now see, generally what I do. So again coming, I take the base of what? Now see, I taught you checkpoint 3. I don't know whether you noticed or not. Tax calculation. From checkpoint 3, how do you go to destination is something that I have taught. Here I talked about taxable income given to you. From taxable income, how to calculate the tax liability is the first part that you understand. Then you go up, correct? You go to personal allowance. Generally, you go to then what? Personal allowance. Have a look at personal allowance. What does personal allowance say? So again, total income, all NSI, SIDI minus the loss relief or QIPs, you get what? Tell me. Net income. From net income, what do you deduct? Tell me. Net income message, what do you deduct? Tell me. Personal allowance. How do you calculate personal allowance? Now, stay very vigilant, right? Personal allowance is not based on net income. It is based on adjusted net income, right? Personal allowance, if adjusted net income of an individual is between 0 to 100,000. Sir, what is adjusted net income? The adjusted net income definition is what? Your net income minus the gross personal pension contribution minus the gross gifted donation gives you the adjusted net income, right? So 0 to 100,000, 100,000 to 125, 140 or greater than 125, 140. Now it is not NI, it is ANI. ANI is calculated with the help of NI. So whenever you are calculating personal allowance, ask yourself that how much is net income? Okay, net income is XYZ amount. Is any personal pension contribution given? So there are two types of pension contribution, right? So I have a look. First, understand. For calculation of ANI, you need to understand what is GPPC, GGAD. That is gross personal pension contribution and gross gifted donation, right? If you do any kind of personal pension means what? Have a look. We have here what is personal pension, right? The fund or scheme is set up by an individual. So see, I am an individual, I am employed, self-employed. Can I start a pension contribution or pension scheme on my name? Yes, right? In that case, what happens? It can be any employed, self-employed or an individual. There are two implications of personal pension contribution, correct? A tax implication and an ANI implication. Tax implication is what? You have grossing up concept. The government has said that if you put up 100 pounds into the what? Tell me, pension scheme, right? We will put what? 20%. That means if you put 80, we put 20, correct? So you have to do net personal pension contribution of 80. We will contribute 20, right? So a grossing up concept applies. Grossing up concept says your net personal pension contribution divided by 80 into 100 will give you your gross personal contribution, right? GPPC, right? So 0 to 37,700 plus what? Tell me, GPPC at 20% or 8.75%, correct? Have a look. Now what happens? There is an extension of bands, correct? Extension of bands means what? Your GPPC amount and your GGAD both will do what? Tell me, increase your bands, right? So whenever you do a pension contribution, the bands will increase, right? With the gross personal pension contribution and GGAD, right? So have a look, extension of bands. So tax implications have two things. One is grossing up concept and second is extension of bands. And ANI implication is deducted from adjusted net income. Have a look, right? So whenever there is a GPPC or GGAD, keep in mind while you are doing after checkpoint 3 tax calculation, your slabs have to be increased by that amount. Anyone having any problem? Then you have a occupational pension scheme. Occupational is okay, right? It is generally set up by the employer for the employees, correct? Both can contribute. We've talked about exemption. Now come to GGAD. GGAD is cut, copy, paste, correct? But what kind of donations will work in GGAD? Any kind of donation done for charity, correct? Gross gifted donation means what? Aid donation means what? Any amount given to donation of any. Let's say you give to Red Cross, correct? You give to some international PETA, VITA, some authority, you give, right? Some kind of donation. You have two implications, tax implication, ANI implication, correct? What is the tax implication like? Tell me. Tax implication and what? ANI implication, right? So what is tax implication? Grossing up concept. You have basic grossing up concept and extension of bands will also apply here, right? Donation or charity done to any charitable organization. ANI implication deducted from adjusted net income, correct? Now come to again personal allowance. Now you know what is ANI. ANI is nothing but NI minus what? GGAD and GPPC. If the wording given to you is personal pension contribution paid, made, done. If the wording given to you is personal contribution paid, made, done, correct? Divided by 18 to 100 is your gross personal pension. Paid, made, done is net personal pension. But when you have to deduct from ANI, you have to deduct gross personal pension contribution, correct? Have a look. So whenever if ANI of an individual is between 0 to 100,000, correct? 100,000 pounds, right? Then personal allowance is available fully 12,570. If it is more than 100,000 but up to 125, 140, PA reduction will happen. But if it is more than 125, 140, no PA available. If your ANI is more than 125, 140. Now come to the part where PA reduction happens. The PA reduction is quite simple. PA available is 12,570 minus the ANI minus 1,000 divided by 2. Or in some books you may find ANI minus 100,000 into 50%, correct? You will have reduced PA. Adjusted net income is equal to what? So this is how PA works out. So from my net income, I deduct PA, I get taxable income. On my taxable income, I will calculate taxes, right? Then let's go one more step ahead, right? You have the GPPC, GGAD. Have a look. There is a question here. So net income of Mr. A is 60,000 NSI. Donation made to Red Cross is 4,500. Made is 4,500. So tell me, is this net or is this gross? Tell me. Made 4,500. Gross or net? Tell me. Generally it is paid, made, done. It is net. Correct? And net personal pension contribution is 4,700. So to convert both these to gross, how do you apply grossing up concept? Divided by 80 into 100. Have a look. Then deduct it from the PA and get the ANI. Then you do any reduction of PA that is there, right? Anyone having doubts with this? Have a look. Now coming to notes for PA. If net income, now see if net income is only 10,000, right? Then PA available, even if PA full 12,570 available, only 10,000 can be used. There can be no losses because of PA. Sir, any unutilized PA cannot be carried forward, never ever. PA of 12,570 every year available. Now whatever amount changed, it will be amount changed, right? For the next quarter. Preference of utilization of PA. First you will utilize against NSI, then SI or DI depending on tax calculation. So you have to do the tax calculation, first use against SI. But generally first NSI, then SI, then DI. Worst cases I have seen SI or DI, right? On the tax liability you can do the calculation, right? Have a look. Then going ahead, PA will be deducted from net income and not ANI. Yaad rakhna. ANI is just what? Just keep in mind. ANI is what? Tell me. a working note that you make that helps you calculate PA, but PA will be deducted from NI. There are a lot of times when students confuse that, sir, PI should be deducted from ANI or NI. It should be deducted from NI, but calculation of PA will be based on the amount of ANI. ANI will never form part of any computation. It will always be a working note. If there is no GPPC or no GGAD, correct, then ANI is equal to NI. You can tension free do the calculation. Correct. Then let's go one more step ahead. Then can we go to marriage allowance? Where is marriage allowance placed? Marriage allowance is a tax allowance. Is what? A tax allowance, right? So if tax allowance, will it increase tax or will it decrease tax? Tell me. Whenever there is a tax allowance, right, it will decrease your tax liability, correct? There is a marriage allowance, and marriage allowance transfer can happen only if both spouses are what? Basic rate. So first condition when you go to marriage allowance, always keep in mind, right, that is both spouses should be what? Basic rate band taxpayer. An election of transferring what? 1260 fixed is to be made from one spouse to another spouse, correct? That is the second condition, right? 1260 is fixed, right? You cannot reduce the amount, you cannot change the amount, right? The transferor spouse, that is MA giving spouse, will have PA available of 12570 minus 1260. For her or his what utilization, 11,310 is available, correct? Which can be utilized against his own NI. There is a compulsion that you have to transfer 1260 only. But now see, from one spouse when it is transferring 1260, correct? It goes to the other spouse. You are saying, sir, PA you are transferring, no? So income allowance you are transferring. But when it comes to the transferee spouse, right? That means one who is going to transfer the PA, right? So one spouse can transfer PA to another spouse. Minimum amount, maximum amount and compulsory amount of 1260. Maximum compulsory amount of 1260 will be transferred. Sir, it is an income allowance that is transferred, but in the what? In this journey, it changes from income allowance and takes a route of tax allowance. So on 1260, 20%, that is 252 pounds, is a fixed amount that is deducted as a tax allowance from the transferee or the spouse who is receiving the PA. So he has used his PA of 12,570 and he has received the PA of 1260. But PA 1260 cannot increase your what? PA year. It will decrease your tax liability by 20% of 1260, that is 252 pounds is fixed amount that is there, right? Have a look. Now see, most of the times if a question has to be asked on marriage allowance, same cut copy paste question will be applicable. Net income is 45,000, right, of Mr. A, and Mrs. A has 10,730 of what? Net income. First tell me whether MA is applicable on this or not. Tell me. I don't know whether you have solved question, but this is the exact question. If you have solved questions, you would have seen these kind of questions and you would have said that boss, these questions go wrong, because are both the taxpayers basic rate band taxpayers or not basic rate band taxpayers? Tell me.
No,
Tell
sir.
me. No, not basic rate band taxpayers. Tell me.
They are basic rate band
They
taxpayers.
are. How do you tell me? See, I have given net income. Basic rate band taxpayer, higher rate band or additional rate band are decided on what? Tell me conditions. Net income
Taxable income.
on taxable income. So net income, from net income you will deduct what? PA. You will taxable income. Taxable income. So here in net income is less than, there is no GPPC GGAD. So net income is 45,000, 1070, 10,730. So PA minus, if we do, taxable income will be how much of Mr. A? Tell me. Less
32
than.
430.
So it will be what? Tell me. Have a look. So they both are basic rate band taxpayer based on total taxable income and not on net income. Have a look. Then what happens? Then you say that boss, Mr. A or Mrs. A has some unutilized PA, that she or they have made a election transfer of what? 1260, correct? So from the 12,570, 1260 will be first preference deducted and only 11,310 will be received by Mrs. A. So she can deduct 11,310 in her income and they can go ahead. Have a look. This question you can solve, no problem, right? Then coming to child benefit tax charge. Now see, from my tax liability, One was tax allowance, marriage allowance, which reduced my tax liability. Now I'm going to go to child benefit tax charge. Now generally child benefit is provided to people, right, or to new parents, correct, who are what, generally not having a very high income and have a child. It is very difficult to what, take care of the child, right? Hence the government provides with child benefit charges, correct? But if you have a very high income, you are not eligible for it. Hence what happens generally, tell me, both the spouses, if they have ANI, right, less than, if ANI of both the spouses is less than 50,000, no CBTC will be, or no CBTC will attract, because you are what, earning very less, correct? So no CBTC will attract. But if any spouse has, so I'm going left side, then I'm going right side, any spouse has what, more than 60,000, what, tell me, ANI, in that case, whatever, see now here the question is CBTC that is received from the government, correct, and you will deduct what, tell me, or you will repay the whole CBTC as tax to the government. So if your ANI is more than 60,000, right, full, that is 100% child benefit will be paid back to the government as tax charge. But if you have an ANI, or if any spouse has an ANI between 50,000 and 60,000, CBTC will be equal to what, CB or child benefit received into ANI minus 50,000 by 100. Whatever this amount, that will be the percentage. No other taxation system has such complicated what, percentage calculation. ANI, let's say your ANI is 55,000, correct? One of the spouse has 55,000. 55,000 minus 50,000 by 100, right? That comes to what? Tell me, 50%. Answer will come to what? 50%. 5,000 divided by 100, correct? 50%. So if you have received CB or child benefit of 5,000, 50% will be repaid back to the government as tax charge. Tax charge means what? It will increase your tax liability. Have a look. So you have a question here. NI 48,000 of Mr. A and 85,000 of Mrs. A. Have a look. NI is this much. Then you deduct GPPC, GGD. Have a look. 38,000 and 57,000, right? This is how things work out. ANI. Tax charge full 7,000. Wait. Child benefit charge received 7,000. Correct. Mr. A has NI, GPPC, GGD. ANI is 31 and 43. Correct. Have a look. In this case, what will happen? No CBTC, because ANI is what, less than 50,000. But your ANI is 65,000. Full 7,000 paid will be repaid back as tax charge. But when it comes to reduction, have a look at reduction. So you have 53,900 one spouse. See, it is not that both spouses should have ANI more than, but when it comes to less than 50,000, right, both spouses should have less than 50,000 ANI. Then only CBTC will not attract. Or any one spouse having income or ANI more than 50,000 or more than 60,000, more than 50 or between 50 to 60, then reduction will happen. More than 60, what, full CBTC will be paid. Any doubt with the spouse with higher ANI will pay CBTC, and when considering threshold of ANI, use the ANI of the spouse having. ऐसा नहीं, one spouse is having 54, one is having 47. You'll say, sir, see, no, 147. No, so don't take. 54 higher person or higher spouse will be considered. Have a look. You can do this calculation as well. You have CBTC, PA, all things will get revised here. Then you, from checkpoint 2, I am going to checkpoint 1. You have two things in between. Loss relief will be done in a later chapter, correct? But when it comes to total income, from total income, loss relief and QIPs are deducted, correct? So what are QIPs? Have a look. QIPs, qualifying interest payments, are of two types. Not a lot of books even emphasize on this, but I don't know, some or the other where a question comes up, you need to be able to handle it. QIPs or qualifying interest payments. Interest payment on loan taken by the employee. If an employee takes a loan, right, for, now see how this goes. Now let's say I am working somewhere, I am an employee of a company. The company says that you have to buy a laptop with your own money for working with us. I am like, I don't have money. So they are like, take a loan and buy a laptop. Okay. I take a loan and buy a laptop and I use it for my official or my employment purposes. Correct. For that laptop, whatever loan I take, that is not deductible. The interest made against that loan is a qualifying interest payment. Is a qualifying interest payment. Have a look. Interest payment on loan taken by partner. Now, if I'm a partnership working in a partnership firm, I'm a partner, and the partnership firm says that boss, you will have to buy a laptop for your partnership work. I buy a laptop, I don't have money, I take a loan. Not that loan is deductible, but the interest payment that I make against that loan is deductible. You will not find this question anywhere in any publication book, correct? Only here, right? So he buys a loan or buys an asset worth 5,000, correct? And 6% loan is payable on that, correct? Only for the number of months he has paid the loan. So 7 by 12. You can have a look at this question. You will not find this anywhere in any books, correct? Then there is something called as ISA, individual savings account, correct? What is ISA? Tell me. Mr. A can have two types of ISA or individual savings account: stock ISA and cash ISA, correct? Stock ISA, what can give you income of dividend or capital gain? Exempt. See, any type of investment that you do from an individual savings account, how does it work out? Every year you open an individual savings account, there is a special account. You deposit certain amount in that, and from that amount or from that account you do your investments, may it be in stocks or may it be in debt security or any investment plans, correct? Any interest, capital gain, dividend that you earn from an investment made through the ISA, it will be fully exempt. But sir, that means any amount I can transfer to ISA? No. Total amount, may it be a stock ISA or cash ISA, cumulatively cannot be more than 20,000. So any investment, right? It is not a deduction of 20,000 or exemption of 20,000. The income that you earn is exempt. 20,000 taxable income you can transfer to ISA, correct? That investment is not an exemption, but the income that you get from the investment is the exemption. Have a look. Savings income and dividend income will be taxed on what? Receipt basis, correct? Generally, savings and dividend income are taxed on what? A receipt basis. But when it comes to what? Tell me. Certain savings income, right? Certain savings income that come up, right? In that you have what? Interest on government and corporate bonds or gilts, correct? On that case, I don't know whether you know it or not. If you have not taken a class with me, correct, you will have a lot of problem in accrued income. Tell me, people who have not done a class, accrued income, is there a very big problem? Tell me. Do you understand accrued income at all? Accrued income.
It's a bit confusing.
It's a bit confusing. This is the table, right, which will solve all your problems on what? Now see, first you every time check if there is no sale or purchase of bonds between two interest payments, right? Bonds or whatever government securities or gilts or corporate bonds, then the interest will be taxed on receipt basis, correct? If there is a sale or purchase of bonds between two interest payments, then if it is a purchase, then from date of purchase to next what? Tell me, interest payment, accrued interest will apply. If there is a sale, then from date of what? Accrued interest will be taxed on last interest payment date to date of sale. Have a look. Mr. A purchased a government bond for $15,000 on 110. How much? Tell me. 2022. Nominal value is 12,000. Interest rate is 7%. Interest is payable every 6 months on 31st December and 30th June. Now see, between 31st December, now see, 110/2022 is when you bought the shares, correct? That means, did you buy the shares between two interest payment dates? First tell me yes or no. Correct? That means, will interest accrued, your accrued interest concept will apply? Yes. From the date of purchase to next date. So tell me, after 110/22, which is the next payment date? Tell me, of interest. 31st December. You receive full interest because you are owner on that day, correct? But will full interest be taxed? Only interest accrued will be taxed. Have a look. See, from 30/06/2022 or 30/10/2022, na? Dekho. You have bought on 110/2022. So how much will be taxed? 210 will be taxed in tax year 22-23 for this December payment. You will receive full amount, correct? Of how much? 12,000 into 7% into 6/12. But taxable will only be 3/12, correct? Then 23-24, right? Have a look. 23-24 mein, is there any sale? Have a look. Sales on 31/03/25. That is next year, 25 or 24-25 mein, correct? So 22-23, what will happen? Both interest that you receive, check between any interest dates, is there any sale? Now see, after 31st December 2022, it is 30th June 2023. देखो जरा 30th June. So from 31st December 23 to 30th June, is there any payment or is there any purchase or sale? No. Then on 30/06/23 it will be taxed fully. Then on 31/12/2023, between 30/06/23 to 31/12/23, no sale, directly fully taxable. Receipt basis pay, taxed on 31st December 23. Then comes 30/06/2024. Again 420 will be taxable on receipt basis. But when it comes to 30/06/24 to 31st March 25, you sold it on 31/12/24 पे मिला 420. But when it comes to next, then from 31/12 up to 31st March only, your accrual basis will apply. Have a look. This is the best I could do. One question that covers everything. If you have doubts in this, you look at this one question and this table. You will not find this table anywhere. This is my own production, correct? I have taught it for 10-12 times. So I know exactly what is the problem with this question. This table can be applied in any type of what? Tell me. Question that comes up in exam on what? Your interest on government and corporate bonds. You will not find this anywhere in any book. No book has this, right? You can get it. I'll send it to you, correct? Then coming to the part of Ajo. This one I think I have given for homework, right? With this your dividend income, savings income part gets over. We go to property income, correct? Up till now, whatever we have done, any doubt, query, problem, tension, tell me. If no, then I can go ahead. Tell me quickly. Tell me. Can I go ahead? Tell me. If you have any doubt, I can give you a minute. Quickly, we can solve that doubt. Should I go ahead? Tell me.
Yes,
Jaldi,
sir.
jaldi. Yes. Okay. Everyone okay? Tell me. Okay. Yeah. So now we go to what? Property income. Let's go to property income. Correct? Can we go to property income? Tell me. Property income has three types of taxation. What are the three types of taxation in property income? You have basic property income taxation, generally residential, non-residential property. You have short lease that you give as a owner. When you give your property on lease, short lease premium arises. Rent a room relief, right? And furnished holiday lettings. What are furnished holiday lettings? Furnished holiday lettings is no practical part in your syllabus, but furnished holiday lettings, theory of whether the property is a furnished holiday letting or not is something that has come up. No book focuses on that. You will get the full definition as well as one question on this. You never know when the examiner touches a question on furnished holiday lettings or furnished holiday accommodation, FHA as they call it. Basic property income has a proper format which you need to follow, right? Now always remember, in property income, receipt basis taxation will happen, that is cash basis, correct? That means whatever is received between the tax year and, very important, rent received between 6/04/23 to 5/04/24, right, will be taxable. Received actually whichever or whatever is received within that 6/04/23 to 5/04/24. Allowable expense, right, paid between 6/04/23 to 5/04/24. Insurance, agent fees, redecoration and painting. Please take care. A lot of people feel redecoration and painting is not a revenue expense, but revenue expense, right? But now tell me, if there is a property and any capital expenditure is done, will that be allowable expense? No, right? So you have insurance, agent fees, redecoration and painting, gardener fees, and there is something called as replacement domestic item relief, right? A lot of you have a lot of problem with RDIR or replacement domestic item relief. We will revise it in full, correct? Insurance also, for which period insurance is there, that is not important. The date on which the insurance amount is paid, that is important, right? Then agent fees, redecoration and painting, gardener fees, right? Replacement domestic item relief. You have what? property income for tax year 23-24, right? Have a look. What happened? You have a question here. Have a look at the question. Best question that you can get. Mr. A has property 4,500. Now have a look. I just want to take this, right? Because a lot of times this rental income that you receive, correct, is not taxed properly. Have a look. Has rented out a tenant for 4,500 per annum from 109/2023. The rent is received monthly at start of the month, right? So from 1st September at the start of the month he is paying rent. That means 1st September he will pay rent, correct? 1st October, November, December, January, February, March. Should I include 1st April in tax year 23-24?
Yes.
So how many months is the rent received? 8 months. Has been asked a lot of times in exam and can be asked in this exam as well. Redecorating done in August 2023 for £250 paid in September 2023. Both are tax year 23-24. Great, take up. £150 done in March 2024 but paid in June 24. Will it be part of 2024? No. Even if it is done in March 24, when it is paid date is important.
June.
Agent fees 200 paid on 1st March 2024. 1st March 2024 available. Insurance expense for 1/1/2024 to 31/12 paid on 1/1/2024. Is the period important? No. What is important? Paid date. Correct. This is how things work out. Then, if any expense incurred before the property is rented out, where property was vacant, will be an allowable expense, right? But if you are self-occupying the property and you do the expenses, then that will be considered as private use expense and will not be allowed. Property income, if nothing mentioned in the question, consider cash basis as the default basis. But if rent receipts are greater than 150,000 and specifically mentioned in the question that use accrual basis, then only follow accrual basis. Accrual basis is what? Actually when the expense is done, right? Not paid. Actually when the expense is incurred, correct? At that time, you will what? Take the expense. Then coming to replacement domestic item relief. Now replacement domestic item relief, a lot of you have a lot of problem. RDIR. Is it? Tell me. Or is it okay with everyone? Problem or no problem? Tell me. You can speak up. Tell me RDIR. What is RDIR? Tell me. Simple. See, I have given a property on rent to someone. Now without what? Domestic items like washing machine, furniture, fridge and other what? Tell me. Consumer durables. It is difficult to stay in the property. So what you do? You buy the washing machine, furniture, fridge and other consumer durables and install it within the property so that someone who comes and stays in that property, right, can use all those things. But initially when you buy it, correct, that cost is not allowable as an expense, correct? But now let's say 4 or 5 years happened. You had a what? Two types of washing machine are there. Let's say a washing machine was there, right? You had a manual washing machine. There is a manual and or semi-automatic and automatic washing machine. Semi-automatic means what? Manual, so you'll have to wash your clothes with your hands, right? वो manual हो गया, correct? But when it comes to semi-automatic and automatic, what do you mean by semi-automatic and automatic? Simple. Semi-automatic means what? You have two tubs, correct? One does the washing, other does the drying. So once washing is done, you take up all the clothes and put it in the dryer, right? Now you took a semi-automatic washing machine. Now 5 years happened, right? 5 years have gone by, and now you have to sell the, or you have to buy a new washing machine because the old one has stopped working, right? And the tenant now says that please change the washing machine. So what you do? You go to the market and you say, now I'm going to buy a automatic washing machine, right? Then you ask the shopkeeper that, boss, do you have the old semi-automatic type? He's like, yes sir, we have that, correct? So new automatic machine, correct, is for let's say £700. And old, if you buy the same type of semi-automatic only, it is available at £500, correct? Like great, right? Let's buy semi-automatic. But your tenant says, no, no sir, no semi-automatic, automatic only. You buy automatic, but the RDIR that will be available would be for cost of equivalent or same type of domestic item, £500 worth. What? £500 worth of semi-automatic wala same. What? Not a modern alternative will not be allowed. That is modern alternative is automatic. Semi-automatic washing machine will only be allowed. Cost. Market value as on that date of semi-automatic washing machine has to be gathered. And if you say that boss, see, now I'll give you this old machine, can I get scrap value of the old item? Yes, that you will deduct from the what? The domestic market value of the or cost of equivalent or same type of domestic item. See whether you are okay or not. Tell me. Can I go ahead? Tell me. Just a second. Are you okay with RDIR? Tell me. Any problem? Can I go ahead? Did you know this so much in detail? Or is it new thing for you? Tell me. Have a look. Mr. A replaced a semi-automatic washing machine with an automatic washing machine for 250 pounds and sold the old machine for 750 pounds. Market value of similar semi-automatic machine as on the date of replacement during tax year 23-24 is 175 pounds. So you will get what? Tell me. 175 minus what? Tell me. Will you get 250 as your expense or 175? 175 and 75 will be deducted from that. Correct? Have a look. Question you can try. Is it okay? Anyone has any problem? Then coming to interest on loan for purchasing or acquiring the property. If the loan is for residential property, then it will not be allowable as an expense, right? But it will be allowable as a tax allowance at 20% interest on loan. So in tax allowance, we have done two things: एक marriage allowance, correct, and interest on loan for purchasing residential property. If it is a non-residential property, right, then property owned by company or FHA, interest on loan will be allowable as a deduction and not as tax allowance. Are you okay with this? Tell me. Can I go ahead or no? Tell me. Can I go ahead? Tell me, tell me. Whatever notes you have, you can sit with those notes. No issues. Okay. Just go through it one by one. Don't get carried away, right? Have a look. Should I go ahead? Tell me. Let's go ahead. Computation of income. See, this is the question here, which I have solved here. This is the whole question, Mr. A wala question, correct? Which I have solved here. Yeah. This is what the 100 pound that we talked about, correct? And the interest ka tax allowance here, correct? If a person has two properties, right? Property 1 and property 2, correct? What should be done? Profit, one property has profit and one property has loss. You will take the net, what? Tell me. Net profit or net loss, whatever it is, correct? Net profit will go into the computation. If it is a net loss from property income, correct, it will go in the loss memorandum and carry forward and use against what? Future property business profits. Have a look. Then short lease premium less than 50 years, right? Owner taxation, that is, so two taxation happens here. Owner taxation means what? Tell me. So I have a property which I have short leased to someone. 20-25 years I have leased it, correct? Then what will happen? Lease premium received minus the capital component of lease. What is the capital component of lease? The lease premium received into 2% into n minus 1, correct? Into 2% into n minus 1, right? Will be the amount that will be deducted. So let's say for 20 years period, or here it is there. Have a look. Leased out the property for 15 years for 70,000. Tenant is what? Mr. B. Lease starts on 1/10/2023. So lease premium received 70,000 minus 70,000 into 2% into n minus 1. Comparatively simple to remember. This is the revenue component of lease, fully taxable in the hands of tenant. But when it comes to what? Tell me. Fully taxed in the hands of owner, correct? Then this revenue amount should be allowed as a deduction into the hands of tenant, correct? Because he's doing some kind of what? Tell me, business there. So tenant taxation is what? Will be something that we'll discuss in what? Let's say self-employed, correct? Again, we are going to do it in self-employment, right? Then let's go ahead. You have a rent-a-room relief. What is rent-a-room relief all about? Tell me. If now see one part of the house or one room in the house you have rented out to some what tenant, right? Is sort of paying guest type, correct? So you have a concept of paying guest, correct? Who stays in that one room, correct? In that case, rent-a-room relief. And also there are certain conditions, right? Certain conditions is that that person who is renting the room, correct, should not have generally access to the other parts of the house, right? So if let's say that paying guest pays you 7,500 or less what rent during the year, then that income is not taxed at all, that is fully exempt. But if it is, if a rent room relief is received more than 7,500 pound, then you do two calculations: rent room minus 7,500 or rent room receipts minus actual allowable expenses, whichever is lower, which will be taxable. Have a look, there is a question here. If Mr. A has a property and as the main residence, he rents out a single room to Mr. B and receives rent for tax year 23 of 17,000. He has property allowable expense from the room, correct? And the property income in hands of Mr. A is either 5,000 or 10,000. So once you do what? Tell me. Renter room relief, correct? 7,500, right? Against that 17,000, you deduct 7,500 or 5,000. Whichever is lower will be taxable. Here 5,000 if you deduct and 7,500 you deduct. Better is what? Taxing 9,500. So 9,500 will be taxed. But when it comes to 10,000 allowable expense, right? Then this will be the taxation. 7,000 is better. Is there any doubt here? Tell me. Have you done this? So wherever allowable expenses is more than 7,500, correct? Then you better do receipts minus allowable expenses, right? Allowable expenses we've already discussed. Any problem here? Tell me. Can I go ahead? Rent a room relief or your what? Short lease premium. Any problem? Can I go ahead or should I stop and
No, sir. All good.
right? Definition of FHA. Quickly, definition of FHA is very simple. The property is furnished for letting out, right? It is like a second home you have what in the outskirts or maybe nearby city, correct? The property is furnished for letting out. Letting out property on commercial basis, right? It has to be what all four conditions here that are given need to be fulfilled. Letting out property on commercial basis with the intention to earn profits, and it is available to be let out against or to public for more than 210 days, right? That is minimum 210 days. So you can stay in the property. So what happens? You generally go and stay in the property. You cannot stay, even if you are staying. Other than that, for 210 days, it should be available to the public. It is actually what? Short or long term let out to public, right? For more than 105 days, correct? In short term, it should be let it out to the public for more than 105 days. And long term occupation, that is 31 days or more, should be less than 155 days, will only be allowed. Have you done any question on this? There is one question here. Mr. A owns a holiday accommodation which is fully furnished and commercially let out. He stayed in the property for 85 days. So see, it is a holiday accommodation which is fully furnished and commercially let out. So first two conditions fulfilled. Third condition, he stayed 85 days, remaining days. So out of 365, 85 days gone, 280 days, it is actually available to public, correct? He had rented out the property to Mr. B. See, only 1 or 2 days renting or maximum 10-12 days renting allowed. 31 days or more if you rent out to someone, it is not what? Business renting, it is normal renting, correct? So Mr. B had given from 1st January to 31st March. So 90 days he had given. 90 or 91 days he had given to whom? Mr. A. So from the 365, 85 days gone, correct? And 91 days gone, right? 189 days it was available to public, out of which public took up somewhere, let's say 105 days, right? Right, in that case it will be allowed. You have to just actually let out 105 days. I have not seen a question come up in exam, but if car is used for property renting business on cash basis, AMAP deduction is allowed, right? So in allowable expenses, AMAP expenses will be allowed. What is AMAP? In a short time, AMAP will come up. Tax treatment of FHA is quite clear. It can be on cash or accrual basis. Both are allowed. Cash is default method. Any expense, whether revenue or capital. Here, this is important. right, will be deducted as any revenue or capital, whatever it is, will be deducted as allowable expense in cash basis. Any expenses which is revenue in nature, correct? Accrual basis mein it will be allowed. Capital in nature also accrual basis. You can claim capital allowances on the same. Motor capital allowances, second part may will do, right? Interest on loan for purchase of what? Purchase or improvement of property, right? Will be what? Cash basis or accrual basis will be allowed. You can just read this. I have not seen a question come up on this on FHA for a very long time, right? Then can we start with income from employment, or you need a short break before going into income from employment? Tell me. Can we go ahead?
Give a short break.
Short break. Chalo aa jao. It's a 15 minutes break. So come back by 10:33 am. Stay in the meeting only. Don't leave the meeting. Okay. Off your videos, mute yourself and go, and come back by 10:33 am. Quickly come back, everyone. Are you all back? Quickly come back.
Yes, sir.
So, just an announcement to make from my side, right? Right. Someone had asked a doubt. Sajun has asked a doubt that what she has asked. Tell me. Is the property income always calculated on cash basis unless it is asked to what? To do in accrual. Yes, it is given most of the questions that you see, right? They have said that what? Most of the questions are going to be what? Tell me. Cash basis only. I have never seen an accrual. There has to be a question which says that calculated by cash as well as accrual basis for you to do accrual basis, right? Right? Okay with it. Should I also share the day one ka? Wait, I'll share the notes on the group. So if you can download and have a soft copy of that handy with you. Just send you the notes. Have a look in the group. You can download it and keep it ready with you. About the announcement. Now probably you all will be giving some or the other exam for your June 25 attempt, right? How many of you are going to give a skill level paper? Tell me. Wait, we can have a poll here. How to do a poll, right? Breakout room caption. पोल का ऑप्शन किधर है? No poll option. Okay, hear me out. Most of you will be giving a skill level paper or a P level paper, right? If you are giving a skill level paper next quarter, June 2025, only for people who have registered here, right? And do the admission, right? For June 2025, right? I am giving a good offer for you all, right? 7,500 is the cost that I am offering for what? Tell me. Any skill level paper you take. We have 5 options, right? Let's say you have what? May it be PM, F5, F6 UK tax, so you are not going to give. Other than UK tax, whatever 4 papers are left. If you want to give any skill level paper, right? And you want to do a what? Tell me. Classes with us, right? 7,500 is the cost, right? If you do it, okay. No, I've sent the chat link, no? I've in Jasraj ko I've sent the link. Okay. Yes. So what I was saying, yeah. So I was saying that if you have to give any paper for the next quarter, any skill level paper that is pending, right? 7,500 is the cost, where you will get what? Full 100 hours or 95 hours worth of what? Face-to-face classes, correct? That is live online classes, correct? Then you have what? All handwritten notes will be given, correct? You will also have access to 1 year. For 1 year, you will have access to all the recordings, correct? Also, there will be one mock and as a last day revision session that will be given to you. More and more questions will be solved. So it will not just be what? Understanding of concept plus practice. Both things will be done in class only. So class goes, it will be a weekday or a weekend class. Generally, I'm telling you that FR and FM are going to be on the weekend if you want to do, right? And PM and audit, right? Audit will also be on the weekend. PM might be in the weekday. PM and UK tax is in the weekday, correct? All other 3 batches are on the weekend. Now, a special offer for you all. 7,500 is the cost. But if you take the admission before the class starts, that is 15th or 16th, correct? Then you'll get a extra 1,000 off from my side. So logically, any skill level paper if you're doing, you'll get it for 6,500, right? So if you want to enroll, right, let me know in the WhatsApp group. From the WhatsApp group, you can directly message me, right? And I can do your admission today itself only. So you are sorted for June 2025. If you are confused about what paper to give, not really clear, so after 4th your exam is done, right? If you want, you can call me and talk with me, right? Any whichever way, I will call you after the exam for asking how the exam went, right? And whether anyone who's interested, tell me for next quarter, have you planned anything? See, I'll tell you simple. I know you have taken admission some or the other where and you have not passed certain papers, right? If you want to do an certainty pass where I have, like for FM, if you are going to take, I can tell you FM, PM or FR, I have faculties whom I can boast who take classes for 100, 120 hours, right? And will surely help you pass. We all have a good passing rate, correct? So if you are any whichever way interested, right, let me know. You can message me, right? 6,500 is the cost for any skill level paper. Coming to P level papers, we are launching 2 P level papers. One is AFM and one is SBR, right? Anyone for AFM, SBR? Tell me. I got 2 or 3 names who are going to give AFM, SBR next quarter. AFM cost is 14,000, correct? SBR cost is 14,000. But if you take what before 15th, right, you will get 2,000 rupees off on the P level. So you'll get it for 12,000 AFM, 12,000 for SBR. See, I am putting up what lower rates, not because that what I want to do this or that, but I know some or the other where you have paid fees, some or the other where you've already committed, correct? But I can tell you, if you want to pass the exam, you must have done classes some or the other where. I don't know where you have done classes. If you have not done classes, great opportunity for you to do the classes at lesser rate. If you have taken admissions anywhere, right, and you feel that the quality is not that good, my motto is only delivering best quality, right, at the best rates, affordable rates, because this is what the affordable rate is, correct? This is where I draw a line, right? And I'm doing it only for the students and by the students. I have been made by students, 80% results, every quarter 50 students passing. Okay. So I have done that quite a lot of times, right? Now I want to do it for the students, right? Whatever it is, right? Everything is going to be for you only, right? In that 6,500 amount of any skill level or 12,000 of what? Tell me. P level. You will get whatever in P level also 100 hours plus recordings will be there. The whole recording will be posted online, correct? You will get access to that recordings. All handwritten notes like this, correct, will be given in class. You will be made to write the handwritten notes, right? So all these things will happen, and 70-80% pass rate is there. If you come to class every day and follow what we say to do in class, surety of passing was quite high, right? Okay with that? Anyone who's interested, message me personally on WhatsApp, right? Or you can directly buy it from my site also. Tomorrow, day after, it will get launched. Can we go ahead? Tell me quickly. Let's start. Income from employment. Quickly. Share the notes. Oh, okay, I'll share it in the group. Group mein you are not there, okay? I added you in the group, no? I'll send you it.
Sir, I just joined you.
Okay. So quickly, income from employment. What is income from employment? The employer pays anything to the employee, correct? Employer pays anything to the employee. Yeah, you can join September quarter also, you can join, no problem. You can see LW can be done within 1 month. So you better plan June May only what you have to do. LW can be done in 1 month, 1.5 months. You can do LW as well as the classes. You give the LW first, right? Or you could take law exempt as well after your BCom is done, correct? So you can, so all these things, I have a good understanding of the ACCA syllabus, ACCA, how it works out. You can always have a call with me through the site also. Free ACCA what? Tell me. Guidance program that I run on my website, if you have seen. From there, you can book half an hour with me as well for guidance before exam, after exam, correct? Chalo. So employment income, right? Now a lot of people, what they do, show their employment income as self-employment income and self-employment income as employment income, correct? Generally, employment income is shown as self-employed. You can claim expenses against it, right? But the law is very clear, right? If there is a mutuality of obligation that employee is obligated to do all the work given by employer, then he's an employee. So that income cannot be shown as self-employment income, correct? Then if there is a control, if someone has control over you, right, then it is not self-employed. So it is basically what? An employee or a contract basis, correct? Or contract basis worker. So that is how things work out, right? So you have mutuality of obligation, control, benefit, equipment, financial risk. Benefit means what? All benefit of employment, what? Your leave payment that is there, or maybe sick pay you are given. See, if you are in self-employment, one day if you are sick and if you close your business, will you get money on that day? No. But if you are an employee, will you get money on that day? Yes. So if that is the case, then you are an employee. So why do you show? See, employment income is 100,000. Self-employment income is also 100,000. That is your revenue. Against the revenue, you can claim expenses in self-employment and lesser income will be taxable. But in employment, full 100,000 that you receive, fully taxable. Correct? So equipment, if the employer, that is the owner, gives you the equipment, right? Employer provides what? Equipment to employee. Financial risk, employer owns the financial risk of the work done in the employee's what? Tell me, capacity. Whatever risk is there, employer owns the capacity, right? Then salary generally taxed on what? Receipt basis. Go with the flow of the question, correct? Gross annual salary, gross salary, salary paid, correct? These words will be used. So in employment, what happens generally is, right, you tax the employment income, correct? Then there is a format, that is there. Then you have commission or bonus, correct? Date of entitlement or date of payment, right? Date of entitlement, calculation, finalization. Generally, there is a date given here. Date or last date of the period for which bonus is paid. That is also to be what? Ignored. So date of entitlement or date of payment, whichever is earlier. Generally, you have something like this. Dong is employed as well as an annual salary has been paid. Bonus in April each year. Bonus of 2,800 received on 6th April 2023 in respect of the year 31st December 2022. In respect of the year is not at all to be considered. It should be considered what? Payment or entitlement. Entitlement means what? Making entry into the books of accounts, correct? For which year ending the bonus is, that is not important at all. Then you have what? Reimbursed expense plus what? Now see, this is the small format that is there. Salary, bonus, commission. Then you have benefits that are taxable. Salary is taxable, bonus, commission received is taxable, benefit is taxable, reimbursed expense, whatever expense is there, that is also taxable. Against that reimbursed expense, you have the deductible expense or expenses incurred wholly and exclusively for business. Then you have cash vouchers that are taxable. From the expenses, you have expenses incurred wholly and exclusively for business, contribution to employees OPC, subscription to professional bodies, correct? Charitable donation under payroll scheme, travel allowances, car mileage allowance. This will be your employment income that goes into your computation, right? No need to learn the format. I don't think a format learning is important, correct? But now let's say a question comes up on employment income. Your adjustments are given. You have to take care of one adjustment. You have to make a format, particulars, amount in pound, amount in pound. Two columns you make, one outside column, one inside column. In the inside columns, you write the calculations, and outside columns take the what? Tell me, taxable or deductible expense amount, correct? Have a look. Now see, reimbursed expense plus expenses wholly incurred. Now what happens generally? Let's say if I go to some other city to take classes. Let's say I am employed by certain organization and I take what? Tell me. Take what? Tell me. I go to certain areas, right, to take classes, right? And my employer says that you incur all the expense, give us the bills, correct? We'll reimburse you. So whatever he reimburses me will be taxable, right? Then whatever allowed as what expenses for. Now see, I went there, correct? And there was an expense of 5,000. I gave all the bills to the employer. Employer said, "Itna 5,000, so much is not allowable. Only 3,000 is the allowable, or we will reimburse only 3,000." So reimbursed 3,000, 5,000 is expense. So 5,000 will be deductible. 3,000 will be taxed. He says 5,000 ka 5,000, correct? No tension, correct? Reimbursed expense can be equal to expense. Now see, what expense? Now see, in that, logically expense, what? With respect to or wholly, exclusively and necessarily for business. It should be for employer business. Now see, I go somewhere, right, and I do some personal expense. That also I am claiming here. It will not be an allowable expense, correct? So you have to understand what expense is. Now let's say I tell you that traveling expense, right? Allowable expense. But if I buy clothes for myself in the other city, will it be an allowable expense for the business of my employer? Even if he reimburses, can reimburse be higher? Yes. Expense, right? So have a look. Reimburse expense 5,000, expenses 5,000. Reimburse expense 5,000, actual expense 4,500. Reimburse only 2,000, actual expense 5,000. So these will be, all three situations will be allowed. Then in benefits, you have two types of benefits. One is exempt benefit and one is taxable benefit. I'll take the important exempt benefits and then I'll move to taxable benefits. In exempt benefit, you have the first benefit, that is trivial benefit, correct? What is trivial benefit? If benefit, what? Given for non-work reasons, that is not voucher and birthday gifts and something of like this, not in recognition of service, right? Then it will be what? Exempt. Plus, it should be what? Means what? See, it is for non-work reasons, means what? Some long service award is given. That is not exempt, correct? But if it is birthday cake, right? Anniversary gift, right? Or best employee award, something of like this given to you, correct? In that case, if the gift is less than £50 per annum, right? Fully exempt benefit. But if the gift is more than £50 per annum per employee, that is per, you are going to do the employee taxation only, right? It will be fully taxable benefit. It will be what? Fully taxable benefit, right? So occupational pension scheme. Any employer contribution to OPS will be exempt and employee will be deductible. I've talked about this before also. Then subsidized on-site restaurant or canteen or gym facility. It is available to few employees, fully taxable benefit. If available to all employees, fully exempt benefit, right? Available to what? All employees, correct? Fully exempt benefit, right? Then car parking facility or car parking charges reimbursed, right? Car parking facility or car parking charges reimbursed, fully exempt, correct? That means employee has parked the car somewhere or employer provides car parking facility. That cannot be taxable, correct? Mobile phone given by employer to employee for private use. One mobile phone will be exempt and more than one phone. The second phone will be considered as asset for use to employee and 20% of the market value of the phone when provided will be taxed, correct? Then Christmas party, annual gala dance, etc. Right? If up to benefit is less than £150 per annum, correct, per employee, then fully exempt. If benefit is more than £150 per annum per employee, fully taxable. Sir, means £200 if it is there, 200 minus 150, no, full 200. Here also in trivial gift, correct? Here. Here. If it is more than 50, full, let's say £70 ka birthday gift given, correct? Full 75, 70 or £75 taxable. Have a look. Then going ahead, Christmas party done. Then you have what? Tell me. Your relocation and removal expenses. Here it is up to, right? So all expenses related to relocation and removal, it should be what? Change in location due to new employment, promotion or change of location, right? Up to 8,000 if you have relocation and removal expense, fully exempt. But if it is more than what? 8,000, correct? Then what it is? Tell me. Up to 8,000 it is allowable as exempt. 7,000 will be taxable. If it is 15,000, 8,000 will be deductible. Then when it is telephone call and laundry expenses within UK, up to £5 per night is fully exempt. More than, see, it here there are two parts, correct? One is within UK and one is outside UK. Within UK, less than or up to £5, correct? Exempt. More than £5, fully taxable. Outside UK, up to £10 per night is fully exempt. But if it is more than £10, it is fully taxable. Have a look. Those could be telephone calls and laundry expenses. Then home workers, additional home expense, correct? So home worker means what? You are going to work from home, correct? Home workers, additional what? Tell me. Expenses, right? So how it will be? Up to £6 per week and above £6 per week. Up to £6 per week, fully exempt. Above £6, additional amount of £6 is taxable. Here it is up to, correct? And here if you can give documentation that sir, because of working from home, I am getting extra bills of XYZ amount, and you can give the bills, right? Documentary evidence, then you can claim more than £6 as well. Medical treatment for bringing the employee to back to work, right? That is what, up to £500 exempt, and over £500 it will be what, £200 will be, or whatever over 500 will be taxable. Here also it is not that more than 500 fully taxable, it is over 500, that is what taxable. Then comes to taxable benefit, voucher and credit tokens. What are vouchers? See, I told you, I give an example. When I joined a job, right? What happened during the first month? I was given what, a voucher for the best employee, correct? And that voucher I could redeem at any pantaloon store and get 2000 worth of what, merchandise free, right? That was what, vouchers for any departmental store given instead of cash for employees personal good and services. Credit token, company or employer card used by employee for personal purpose, correct? Credit token, right? So what happens, generally the employer gives a card, take this card and do shopping for yourself, all the expenses are on me. They have to give what, tell me? They have to give some money, but instead of that they are giving credit token, they are giving credit card, right? That is also taxable benefit. Whatever you buy, whatever amount you buy, that is there. Then there is a employer owned car which is given to employee for private use. Employer owned car given to employee for private use, correct? Value of car benefit taxed is equal to list price of the car into appropriate percentage into n by 12 into what, n by 12 number of months car is used, correct? List price of the car into appropriate percentage, right? List price of the car into appropriate percentage. Have a look. Okay with it? Tell me. So how it will be? So employer giving the car to employee, correct? For private use. In that case, how will the benefit be calculated? List price of the car into appropriate percentage will give you annual car benefit multiplied by n by 12, that is number of months car is used, right? This will be in one bracket, correct? Whatever amount you get, deduct employee. So what happens, the employer has given the car to the employee and the employee feels that, boss, I do not want to use the car for free, I will pay certain what, rent or certain money per month. So whatever employee pays to the employer for use of the car will be deducted here. So that is value of car benefit. List price of car. Now when I say list price of car, has a definition. What is list price of car? Tell me. Printed price of the car, published price of the car as per the manufacturer, correct? Plus all accessories installed at purchase, on the purchase and up to the current tax year, whatever all accessories, means from purchase up to current tax year, all accessories can be included. No discount to be ever deducted, right? No discount received by ER to be deducted, correct? And if let's say you are going to buy the car, employer employee both, employer says I will buy the car that you like, correct? And employer says I have a budget of 10,000, but the employee likes a 12,000 car, correct? And the employee says, sir, don't worry, I will give you 2,000 pounds from my end. Then that could be capital contribution, right? But that capital contribution max allowed only up to 5,000 by employee for car purchase. So let's say 10,000 was the budget, you got a 20,000 car, you said 10,000 I'll pay, sir, you pay 10,000, but capital contribution allowed only up to what, 5,000. So 20,000 cost of the car minus 5,000 max will be allowed, correct? That is what list price of the car. Then coming to appropriate percentage, ask yourself in the appropriate percentage, right, whether it is a fully electric what, powered car, right? If it is a fully electric powered car, zero CO2 emission, 2% is the rate. If it is a hybrid electric car, right, which has a petrol diesel plus the electric engine, right, or in fuel system, correct, then 0 to 50 grams per kilometer CO2 emission, that is there. Check the electric range. If the electric range is 130 miles or more, correct, it will be 2% maximum. So you are remembering, in one charge of electric, right, if let's say you can go 130 miles or more, then 2% is the rate. Then 5, 8, 12, 14, correct? This will how it will be. Then your petrol or diesel car, have a look. Petrol or diesel car meeting, in that you have two parts, petrol and diesel car meeting RD2 standards. Don't worry, all these rates are given to you. But till now, logically, if you had been in class with me, you would have learned the rates, or you would have been in class with any of my employees, correct? Right? Or my faculties, basically. They are not my employees, but my partners, correct? So petrol or diesel car, right? Meeting RD2 standard, petrol or diesel car not meeting RD2 standards. So petrol or diesel car meeting RD2 standards if they have a 51 to 50 gram CO2 emission, 15% plus 4%. If not meeting, then plus 4%, correct? 55 grams will be 16%, and more than 55 grams CO2 emission, it will be 16% plus whatever is the CO2 emission minus 55%. This CO2 emission, can you see a star? The star says that always round down the CO2 emission to the nearest multiple of 5. Example 108 or 109 gram will be 105. So 84 gram, if it is there, 81, 82, 83, 84, everything is 80. But 86, 87, 88, 89 will be 85 grams. So CO2 emission minus 55 by 5, that will give you a percentage, right? So 16 plus whatever percentage is there, right? That will be your appropriate percentage plus 4%. And all this is restricted to maximum 37%. You cannot have car benefit more than what? 37%. You can solve a lot of questions. 100% if an employment question comes up, right? Now see, I'll tell you a favorite question of the examiner. In today's trend, what is the favorite question of the examiner? He will tell you there is Mr. ABC, whatever it is, correct? Mr. and Mrs. ABC, whatever it is, right? They want to start a business, right? She has an option, or she or he has an option of starting a business or continuing employment. If they continue employment, this will be the salary, everything that is received, all benefits and everything. If she does a self-employment, this is what will be her TATP, correct? In that case, you have to draw a comparison. How much tax will be payable in employment? How much tax will be payable in self-employment? Same thing. Maybe, let's say doing self-employment or doing what? Tell me. Forming a company. Individual sole proprietorship or forming a company. They both also have different rules because company has a lower tax rate, correct? Individual has a higher tax rate, correct? So that could also be a question, type of question that examiner now asks in exam. Then car expenses done by employer, right? See, for use of the car, the benefit at maximum at 37%, and whatever the things we have done into N by 12, employee paid for employer, whatever. But other than the usage of car, right? If there are any expenses, additional expenses, car purchase and use, correct? That is insurance, road fund license, maintenance, etc. Already included, what? Tell me, in the car benefit only. But if, what? Tell me, paid by employer, correct? For private use of employee, driver, expenses, right? So driver, chauffeur, what? All other will be what? Fully taxable. If the car is in the garage for a continuous period of 30 days or more, consider it as unoccupied period. So if let's say you have a major accident and the car is in your garage for more than 30 days, then there is a, that will not be included in the occupied period, correct? I have a lot of questions that are here in the book. You can try all the questions. I have 2-3 questions here. You can give it a good try, correct? Today, now see, logically what you should do. If I was on your place, right? 9 to 1, your class completes. I am, let's say, done with major part of individuals, right? Full individuals I am able to complete. 1 ka 130 we can extend, 115, 130, right? Full done, correct? Today, logically start solving all the questions of individual. At least section C and A question. A and C questions you should quickly solve all questions, right? Then tomorrow we are done with remaining part of the portion, correct? Then you solve the remaining questions, right? Now with the car and chauffeur and all other services, if private fuel benefit, that means your private fuel is paid by employee or paid by employer to the employee. In that case, if full expenses, now see what happens. Employer says, I will bear the petrol expenses. Employer says, no, I will repay back a whole, right? In that case, no private fuel benefit will arise. He says 5,000 private fuel benefit, I will pay full 5,000 to you, right? No private fuel benefit. But if he says 5,000 and employee says, I will pay only 400 or 4,000, right? That means, do you want to say 1,000 taxable? No. In that case, even if 1 pound worth of private fuel is provided by employer, right, on employer owned car, then there is a 27,800 into, this is the amount, this is also available in your tax rates, 27,800 into appropriate percentage that you calculated above in the car benefit into N by 12 will be taxable. Makes sense? Have a look. Irrespective of actual amount incurred by employer and private fuel. This is a question that you can try. Have a look here. I have made a small table. Yes, 27,800 into appropriate percentage into n by 12 paid by employer to employee. This expense or deduction will not be allowed, correct? Then going ahead, van, if a van is given by employer to employee, it is owned by employer, given to employee for personal use, correct? 3960 into n by 12, that is number of months van is used, correct? If van personal use is insignificant, now see, if it is given for business purpose, see, if a car is given for business purpose, no benefit will arise. If a car is given for private use, then only benefit will arise, right? If van is used by more than one employee, right, then 3960 into n by 12 will be then divided by the number of employees. Van is given to 2-3 employees, correct? Van private fuel is paid by employer, then 757 into n by 12 divided by number of employees will be your what? Even in your, remember, in your personal or your private fuel, right, n by 12 happens because 27,800 into appropriate percentage is a annual benefit, correct? So car can have two benefits. What are the two benefits? Car use benefit, correct? Other expenses of car, both included here, correct? But if it is repair, maintenance and road fund license, it is already included in the car benefit. But if it is chauffeur services, additional service, that will be taxable, correct? But when it comes to what? Van benefit and van private fuel benefit, correct? Van private fuel is paid by employer, correct? Then van and van benefit is okay with you. If electric charging is provided by employer to employee, it was asked, it will not be a private fuel. So no private fuel taxability for electric cars, right? But 2% pay, will the car benefit of electric cars be taxed? Yes. Pool cars, when employer owned car is given to more than one employee, correct? Then it is a pool car, what? Tell me benefit. Plus car is not kept overnight. Now see what they are saying, that sir, pool car can be a taxable benefit, right? But it will be exempt if employer owned car is given to more than one employee and it is not kept overnight at or around any employee's residence and any private use is incidental, right? If a pool car is given, that is 2-3 employees ko one car is given and they use it for private benefit or private use, then in that case it is fully taxable. Or else if these three conditions are fulfilled, it will be fully exempt. Have a look. Then beneficial interest on loan is the next what? Tell me benefit. Now see, an employee has some function or some kind of what? Procession at home, right? Or in his personal life is going to do some small function. In that case, right, what is going to happen? Now let's say he has to get his daughter what? Admitted to some college or something, right? He needs money, right? He has saved up some money, let's say 50,000 pound is required, right? And 10,000 or 20,000 pound he has, 30,000 pound he has to borrow, right? So he goes to the bank and asks for a loan, right? The bank says whatever XYZ percentage is the loan. Then he goes to the employer and asks that, boss, I want 30,000 pounds, right? The employer is like, why did you even go to the bank? I'll only give the money, right? And then he asks, what will be the interest rate? The employer says that you are my employee only, correct? Either take it interest free or give only very nominal 1%. What? Tell me. Benefit or give interest. So if he had gone to the bank, the official rate of interest for the bank is 2.25%. But when it comes to what? Tell me. Employer loan for employee, correct? If it is given as lesser than the 2.25% rate, then the beneficial interest loan. Now on that also, loan amount is not deductible, but interest on the, and that also benefit part. So if 2.25% is the ORI, correct? If you are giving at 1%, the benefit is 1.25%. If you are giving at 0%, the benefit is 2.25%. Right? Have a look. But in that also, if the loan amount is less than 10,000 throughout the year, right? Beneficial interest on loan is exempt. But if loan amount is more than 10,000 at any time during the year, beneficial interest on loan will be fully taxable. Correct? Any time, even if it goes above 10,000. Mr. A has taken 25,000 loan. Have a look. He pays 78 pound. Whatever paid by employer, to employee, उसमें देखो two methods are there. There are two methods. If loan amount is what greater than 10,000 at any time during the tax year, beneficial interest loan will be fully taxable. If no repayment or additional loan happens during the tax year, right? Then what? Tell me. This is the format. Interest to be paid as per ROI, right? Amount outstanding into 2.25 into n by 12. Use the what? Amount. Minus the interest paid by employee to employer. See what happens at times? 1%, 0.5% you're going to pay to the employer. That will be deductible. Whatever is benefit of interest will be given. But if repayment of loan or additional loan given during the tax year, then there are two methods by which calculation happens. One is the average method where opening plus closing divided by 2 into 2.25% into n by 12 will be taken, or accurate method for whatever months the loan is outstanding, it will be taken that way. So average method and accurate method are done here. Have a look. Opening plus closing by 2. If here the biggest problem students have, sir, what if nothing is given in the question, correct? Whether to tax by average method or whether to tax by what? Tell me. Accurate method. Whichever is lower, you can take that. But if in the question it clearly states you want to follow accurate or average, follow that method and do the taxation, correct? Then you have something called as living accommodation. Living accommodation benefit. I am telling you, car and living accommodation in the employment question, 100 net 200% you will have a question on this. If you get a salary question, car is inevitable, living accommodation is inevitable. Without those two things, life is very difficult, correct? Living accommodation, job related accommodation, JRA, non-job related accommodation, NJRA, correct? So what is a job related accommodation? You as an employee have to stay at the property of the employer, correct? Employer owned property may, if you stay, you are able to give better services, correct? And hence that is completely exempt. Because tell me, a hotel manager, if he does not stay at the hotel, can he provide best services? No. Hence NJRA is what? Oh, sorry, JRA is fully exempt. But non-job related accommodation means what? You have shifted from, let's say, one city to another city to work with your employer, correct? And he gives you an accommodation nearby. It is not his duty to give you accommodation, but he has given it. So it is a non-job related accommodation. There they can have two options. It can either be an employer owned property, or it can be what? Employer rents out the property in his name and gives it to you for personal use or private use. It is fully taxable. Living accommodation, correct? Then in job related accommodation, you have two types of taxation that happens. Basic charge plus additional charge. Basic charge is all about what? Have a look. Your annual value of property or actual rent paid, right? Whenever it is employer owned property or rented property, you have to look at the annual value or the rateable value as they call it. Whatever word they use, annual value, rateable value, whatever it is, right? They use this word, or actual rent paid, whichever is higher, correct? That multiplied by n by 12 gives you what? Number of months property is utilized by employee, correct? Utilized by employee gives you what? The number of months part. Then if you say, sir, they have given us property from my what? Salary, you deduct some money, then employee paid to employer for use of accommodation is taxable living accommodation benefit, right? Have a look. Make sense? Any problem with the basic charge? Tell me. Have a look. From 105.23, which was what? Tell me. Rented by the employer and paid £200 per month for the same. Annual value 2750. So annual value of property or actual rent paid 200 per month. So 200 into 12, 2400. Or annual value 2750, right? Whichever is higher will be taxable. So 2750 will be the amount of value of property, correct? Have a look. Then this into how many months is the property use? From 1/5/23 to end of the year. So 1/5/23 to 31st March. Tell me how many, or 5th April, whatever you want to say. 1st May to end of March. How many months? Tell me. May, June, July, August, September, October, November, December, January, February, March. Around 11 months, correct? So into 11 by 12 will happen, correct? And then at the end, he will pay 150 per month to the employer. So 150 into 11 months he will pay, right? He has paid. That will be there. Then comes the part of annual or basic charge done. living accommodation, two things, right? Non-job related accommodation, right? First, you will have what? Basic charge. Then you have additional charge. Additional charge will be attracted only if, right, original cost of property is greater than 75,000 and employer owns the property which is given to AA. If these two conditions are fulfilled, then only additional charge will apply, right? So if original cost of property is greater than 75,000, if both the conditions are fulfilled, then what will apply? Additional charge. Additional charge is what? So first look at both the conditions, then ask yourself that how the taxation will happen. COPA, cost of providing accommodation. Nowhere given in any book. This is what I use. There is a proper table for COPA as well. Have a look what is cost of providing accommodation, right? COPA minus 75,000 into ORI percentage into N by 12 number of months property is provided to employee in the tax year. See, these notes are so foolproof that any question that is there in any book, you sit with my notes, 100% solving guarantee, correct? 100% what? Solving guarantee is there, right? So cost of providing accommodation minus 75,000 into ORI percentage into N by 12. So let's say what is COPA or cost of providing accommodation. If property is less than 6 years old, then original cost of property plus the capital improvement only up to last tax year, previous or last tax year. If the property is owned for more than 6 years, then market value of property first provided to employee, correct? Plus the capital improvement, right? After first being provided to employee and up to previous or last tax year, right? I don't know whether, see, is it a straightforward concept or do you find yourself confused in this? Tell me. Tell me. How does it work out in living accommodation? Are you comfortable or do you have problems understanding? Tell me.
Comfortable.
Comfortable. Can we go ahead then? Tell me.
Yes, sir.
This kind of question, you can have a look of what? Tell me. I have taken the worst of the worst question that can come up in exam. I have taken all of those what questions, correct? So the same question I keep on changing, right? If in example A above, I change the date of purchase. If in example A above, I will change what? Tell me. Some of the other things. Accordingly, I have solved, right? If the cost was 67,000, then basic charge will arise, but additional charge will not arise, right? Then asset provided by employer to employee. Yes, Tyre, tell me.
Sir, also if the value of property is more than 75,000, but if the case is that employer rents out the property for employee, then additional charge will not
But
apply.
additional charge only applies when it is owned by the employer, correct?
Okay, sir.
I gave you first two conditions are those only. Then asset provided to employee by employer for personal use, correct? By employer to the employee for personal use, right? So in that case, what happens? 20% of the market value when first provided to employee will be what? Or actual rent paid, whichever is higher will be taxable into N by 12, right? Number of months asset is provided in a tax year minus employee paid to ER for use of asset. This is how things will work out. Taxable value of asset provided by employee to employer, right? Then going ahead, there is a question. Then there is a question where there is a gift of asset by employer to employee. Full amount of market value of gift as on the date of what? Gift will be taxable. Employer asset given to employee, correct? Full market value of asset as on date of gift will be fully taxable amount. This will be taxed only once and hence no prorated. Nothing prorate or anything, right? But the biggest problem is what? Tell me. When asset is first used, correct? And then given what? Tell me, gifted. When asset is given first for use and then gifted. In this case, how will you calculate what? Tell me. Have a look at this question. Mr. has received an asset from his employer on 1/12/2023. Asset was bought by employer on 1/1/2023 for 2,700. But market value was what? Tell me. As on date of gift, that is 1/12/2023, it is 2,100. Correct? Mr. A used the asset up to 30/06/2025. On which date? The employer. So from 1/12/23 to 30/06/25, right? 20% into n by 12, whatever is the period, right? Yearly 20% will be deducted from that 2100, or deducted as in taxable on that 2100. Then later on it is gifted. So on the date of gift, you will check out, sir, from this 2100, how much you have taxed up to 30/06/25. All that will be deducted. You will get an amount. Have a look. So from 2100, all that up to 30/06/25 taxed 144,20,105. 1435 is the amount that is still not taxed, and market value is 1400. Higher of the two will be taxed. This is how asset first given for use and later on gifted is taxed. Have a look. Does it make sense? I don't know whether you have done this or not. If not, then kindly please solve this question. One of the best question, or one of the question that is examiner's favorite. Now see, there are two types of car. There is an employer owned car given to employee for private use, or there could be an employee owned car used by the employee, correct, for private as well as business use. So if it is an employee owned car, right, and if it is given for business use of employer, right, used for business use, then on that business use you will get a deduction of AMAP. AMAP is nothing but approved mileage allowance payments, correct? And how does the AMAP work out? Tell me. Have a look. Employer owned car used by employee, private purpose, car benefit. But employee owned car used by employee for business purpose, AMAP is calculated. AMAP is deductible, right? Then AMAP rate allowed as a deduction irrespective of reimbursement received. You will see that a lot of times you will have 60 pounds or 0.60 pounds, that is 60 pences worth of what? Tell me. Per mile allowance, correct? Per mile allowance will be, or per mile reimbursement will be given, right? So AMAP rates allowed as deduction irrespective of reimbursement received. Up to first 10,000 business miles, 0.45 pound per mile, and above 10,000 business miles at 0.25 pounds per mile, correct? So how it will be calculated? Have a look. So Mr. A uses his car in his employment, right, and is due to receive reimbursement, could be 0.20, 0.60. See, reimbursement could be less than the AMAP, more than the AMAP, right? Always reimbursement taxable, AMAP deductible. Irrespective of the reimbursement amount, AMAP will be what? First 10,000, 0.45 pounds. Next 25, or next over the 10,000, it will be at 0.25 pounds, right? Net taxable or net deductible. Have a look. This I have done. You can have a look. Then donation or charity, correct? Whenever you do charity, to what? Tell me. Directly from your pocket, GGAD provisions will apply. But when you tell the employer that, boss, on my behalf, please do what? Tell me, charity. That is a payrolled charity, correct? Payroll charity means what? From your payroll or from your monthly salary, you are telling the employer that please pay what? The charity amount. In that case, that charity is directly deductible from your salary. Here GGAD mein direct deduction is not available. Extension of bands is there, right? Tax implication is there, correct? Have a look. Allow the as a deduction from employment income. Payrolling of any benefit payroll will be taxed. It cannot be allowed as a deduction. Pay as you earn means what? Tell me. Employer deducts the employee's what? Tell me. Tax and directly pays to the government. Every month from his salary, he will deduct tax and pay it to the what? Tell me. Government. PAY system is salary plus all benefits defined in P11D. There is a P11D form which says all what? Tell me. All the types of benefits will be taxed there. But if there is any payroll benefit, that cannot be added in the P11D, and no PAY will be paid by the employer, right, through PAY system. But if it is a payroll benefit is what? Sir, I want to go to the gym. Please pay my expense directly from there. That is the benefit that is payroll. On that, employer is not required to pay what? Tax. On that, employee is required to pay tax, right? And no reporting on P11D. Employee has to monthly pay PAY. This question has come up in exam recently, right? Then traveling expense. When you go from home to office to home, that traveling expense, if you claim against your salary income, that will not be allowed as a deduction. But if you go from home to client place to home, correct, it will be allowed as a deduction, right? If you go to what? Private vacation and all, right? The vacation spot or something, right? In that case, it will not be allowed as a traveling expense. So traveling expense, right? If you go to office and work the half day and then go to client place, right? Then home to office not allowed. Office to client place allowed. And then from there, if you go client place to home, it will be allowed fully, right? If you go to office to just collect documents on the way and go to client place afterwards, home to client place fully allowed. These case laws were there, right? And these things really have happened. Then home of employee to temporary office, if you get shifted to some other office, correct? Then it will be what? Tell me. Can be allowed up to 24 months. A temporary office can only be a temporary office for 24 months. After that, the office will be considered permanent office and expense will not be allowed. I have a question here. You can have a look at this. Very good question. Has appeared in a lot of exam, can appear in your exam as well. I feel, if you ask me, correct, what kind of question that will come up in exam? I have told you already, employment versus self-employment, self-employment versus corporate. That is the way to go. Or you could say some NIC calculations, right, could come up in exam, right, where they could say that NIC, certain salary is there, this is the NIC. If that increases, correct, or salary increases and you do certain investments, what will be the NIC amount? NIC amount, or let's say tax amount or something of that sort. That is also a favorite question of the examiner. Now coming to subscription that are made to approved bodies, correct, and those are deductible expense for a salaried employee. Subscription or fees paid to professional bodies approved by HMRC plus used in employment purpose. ACCA working as an employee in Big Four for tax and accounting allowed as a deduction from employment income. But if you are a ACCA and you work in marketing, correct, then and you pay the ACCA subscription fees, not allowed as a deduction from employment because it is not related to your employment. So it has to be a what? Professional body approved by HMRC plus it should be what? Used for employment purpose. Subscription of fees for personal use, example golf gym subscription, all that will be not allowed as a deduction, fully taxable. With this, I think salary part is done and dusted. Can we move to NICs of salary? Any specific doubt in salary? Tell me.
So can you please explain the major difference between PAYE and payrolling?
Sorry.
Major difference between PAYE and payrolling.
PAYE and payroll benefit.
Yes.
Payroll benefit is, see, PAYE means what? Simple. PAYE system means what? Every whatever is your taxable employment income, on that tax liability will be paid in 12 installments or weekly installments or monthly installment to the HMRC, whatever tax is there, correct?
Yes.
And in that all P11D benefits, that is non-cash benefits, will be included, correct? We
Yeah.
have the P11D form that is filled. But if you tell the employer that, sir, instead of 10,000, no, you pay me 9,000 salary only, 1,000 expense, personal expense on my behalf, right? Paid to the what? Gym or anywhere, right? In that case, if payroll benefit are what? Taxed, this benefit will not be taxable under the PAYE system, right? So 10,000 per tax you will pay, correct? Or 9,000 per tax you will pay. 1,000 who will pay? Employee has to pay the tax on the same under PAYE system. System is PAYE. PAYE is a system where monthly you pay what? Tax. That is how it is.
Okay, got it.
Correct. Then going ahead, we have what? NICs. NICs are, there are class 1 and class 1A NICs that are applicable to employees, correct? Class 1 employee contribution and class 1 employer contribution. Just a second. So NICs, you have class 1 and class 1A. In class 1, you have what? Class 1 employee contribution, class 1 employer contribution. Employee contribution threshold limits are there, employer contribution threshold limits are there. Employee contribution, it is very simple and straightforward. It is deducted from gross salary of the employee, not an allowable deduction. See, even if it is deducted, not an allowable deduction from employment income of employee. Not an allowable deduction for employer also, correct? But when it comes to class 1 employer contribution, whatever is paid, the amount now we have talked not about, we have not talked about it yet. Paid from the pocket of the employer, not an allowable deduction from the employment income of employee, plus allowable deduction, but it is from the ER pocket, that is employer pocket. So it is allowed as a deduction from TATP, correct? Then come to the threshold limit. Have a look. Class 1 employee contribution. Now see, class 1 employee contribution, employer contribution, everything has to be deducted from the salary of the what? Tell me. Employee contribution has to be deducted from the salary of the employee, kept by the employer and paid to whom? HMRC. Employer contribution from the pocket, from his own money, employer has to take out the NIC, paid to the government. Class 1A, employer has to deduct from what? Salary of the employee, right? And then paid to the government. So all three will be either accumulated from the employee or from own pocket and paid to whom? Tell me. The HMRC. Have a look. If gross earnings for a year of an employee is between 0 to 12,570, NIC at 0%, 12,571 to 50,270, NIC at 12%, more than 50,270 or 50,271 and above, NIC at 2%. Correct. Now here, the only thing is that all this class 1 employee contribution, sir, will it be on taxable salary? No, it will be on gross earnings. Correct. So gross earnings, right? Now see, at times what will happen if a person is employed, correct? Not for the full year, but 3 or 4 months only, correct? So what will be the limit that will apply? This 12,570 limit will get what? Tell me. Changed to lesser amount, correct? Lesser amount, that is 12,570 divided by 12 into 3 will be your limit. And if that person in that 3 months earns more than this limit, then taxability will arise. Have a look. Mr. A was employed on 1/11/2023 at company A. He was paid a salary of 1900 per month. Salary is equal to gross earning. Calculate NIC liability, right? So 12,570 limit is now what? He joined in November. So 5 months are there. So he received 1900 into 5, 9,500 minus 5238. So 4262 at 12%. This is how things will work out. So there is a question, there are a lot of questions where this pro rata, what? Threshold limit will be prorated, right? And NICs will be paid. Have a look. Right? Then now what is the gross earnings? Correct? What are gross earnings? Do we have the gross earnings wala part? Have a look at gross earnings. Most of you have problems here. No one understand. Sir, class 1 NIC contribution to be calculated on what amount? Tell me. Do you have clarity about that? Sir, why AMAP directly taken at 45 pesos and not taken at 25 pesos? Tell me. So what all will be included in gross earnings, right? Logically, it is all what? Tell me. Cash that is there, correct? So includes what? Wages, salaries, OT, commission, bonus, sick pay, statutory sick pay, right? Reimbursement not allowed. So any reimbursement paid will be fully taxable, correct? Cash vouchers, interest on beneficial loan, all cash based what? Incomes will be taxed. Tips and gratuities paid or allocated. Now there are two tips and gratuities. Directly paid by employer to employee are taxable, but when directly received by employee from the customers, then it will not be taxable or not be included in gross earnings, correct? Not included in what? Fully exempt benefit will also not be included in gross earnings. All non-cash benefits will be taxed or will NIC will be placed in what? Class 1A NIC will be paid on all non-cash expenses, right? Now come to this normal AMAP rule. Sir, from this includes only one deduction is allowed. That is, or two deductions. One is reimbursement allowed as wholly, exclusively and necessarily for business. And sir, AMAP deduction, is it allowed against the gross earnings? Yes. Will it be allowed at 45/25? No. It will be allowed directly flat at 0.45. Directly flat at what? 0.45. Have a look. So AMAP miles, correct? Salary 50,000, car benefit 4,000, 2,000, 3,000, tips allocated by ER 3,000, right? AMAP miles 15,000, 10,000 at 0.45. This is normal salary. But when it comes to gross earnings, salary 50,000 will be included. Car benefit is what? Non-cash benefit, not included. LA benefit, not included. Tips directly allocated by ER included. AMAP 15,000 at 0.45 it will be deducted. So 46 to 50 is your what? Gross earnings. Gross earnings that are there. On that, class 1A employer and employee contribution will be taxed. See whether you are okay. How gross earnings are calculated. Then they are to be paid on 19th of every month or 22nd of every month if paid electronically. Correct. Then let's go ahead. Class 1A NIC contribution. What is class 1A NIC contribution? Will be paid by employer from his pocket and taxable benefit provided to employee. Correct. On what? Taxable benefit. That is LA, car benefit, fuel benefit, etc. provided. Paid by employer to HMRC on behalf of employee. Not a deduction from employee's employment income, but will be an allowable deduction or expense from TATP. Correct. And same payment at 22nd July, right? Or if it is paid yearly, then 22nd July after tax year. That is for tax year 23-24, it will be 22nd July 24. NIC at 13.8%, no threshold limit. Whatever benefit is there, directly taxed at 13.8%. Have a look. So, whenever asked what is the total NIC liability of an employer, all three liabilities to be included. Correct. Also, as an employer, right? When you go to NIC of employer, right? That is any person. Class 2 and class 4 will also be added. So, देखो, after that, annual employment allowance. Now, see if owner and employee of the company. Now, see you are a company or a company which has more than one employee. Correct. That means only not you are OPC, not you are not an OPC where you are only employee, you are only owner. Correct. Other than that, where you have employees and you calculate NICs on that, right? If your NIC liability of last year is less than 100,000, right, and you have 3-4 employees, in that case, in current year, if your class 1 NIC employer contribution is less than 100,000 in last year, this year you will receive an annual employment allowance of 5,000. So one question on this. Have a look. Mr. A has 2 employees who are paid salary of what? 50,000 each since 2021. Class 1 ER contribution for tax year 22-23 was 10,000. Class 1 employee and employer NICs, right? So from the employer NICs, right, 5,000 will be deducted. Correct. So this 5,000 from the employer contribution here. Have a look. Makes sense. I don't know. I am going a bit fast, or is the speed okay with you? Tell me. Okay. Are you understanding things? Is it helping? Tell me. Now
Yes,
see
sir.
this long service award, cash given, fully taxable, non-cash award, clock and all those given. If award value is more than number of year service, 50 pounds per year, then it will be taxable. If award value is less than 50 pounds per year. So let's say you work 25 years, 15 to 25, whatever is the amount. If the non-cash award is less than that value, then it will be what? Exempt. But if it is more than that value, it will be taxable. Correct. With this, income from employment is done. Tell me any doubts? Income from employment and related NICs. Right? I have not taken NIC as a different chapter. I have merged NICs into what? Tell me. Employment or self-employment. So it gets much more easier for you to understand. Tell me, are you okay with whatever we have done? Can I go into income from self-employment? Tell me. Now I told you, is it better to show an income as self-employment or CG? Because see, self-employment may the taxable rate is 20, 40, 45. If you show the same sale of some goods or what material, right, as CG, then the rate is what? 10 or 20% for normal asset, 18% and 28% for what? Residential property. Very low compared to what? Self-employment. So badges of trade tell you whether to treat a expense or whether to treat a sale as self-employment, as business sale, or to treat it as what? CG. Subject matter of transaction, ask yourself, right? I've told you a lot of times in class, right now reiterating. There is a flat that you purchased 10 years ago and you sold right now, correct? It is what? A capital asset and CG will arise on it. But you have bought a stock yesterday, you keep on buying stock every day, buying and selling stock, right? Then the profit on it will be taxable as business profit, right? But if you bought shares 10 or 20 years ago, correct? 10 or 20 years ago, you bought a share, correct? And right now you are selling it, capital income. Length and period of ownership, right? Frequency of similar transaction by same person. Supplementary work, improvement and marketing, right? If you pack and repack, what? Tell me. Big lots of what? Tell me. Material. Then it is what? Nothing but business, right? Reason for sale, if it is a forced sale, then it will be capital gain because someone is forcing you to sell the what? Asset at loss, correct? But if it is a motive, at the end it is motive. If your motive is to earn what? Your income, earn what? Profit out of it, then it is business income. But if the motive is what? Chargeable or holding the asset for longer period will be chargeable gain. These are called as badges of trade. I don't know where it will come, how it will come, but one or two can come in your section C part if they have to ask, right? Now from tax year 23-24, individual has to make books of accounts either from 1st April 23 to 31st March, because before this it was open for individuals also to make or to follow any accounting period that is there, but now the system has changed, right? Up to last year, a person can choose any period as his books of accounts. Accounting period and taxability of 12 months would be done in the year on which last accounting date falls, correct? If accounting period is 1/1/2022 to 31/12/2022, where last day used to fall, that was a tax year in which the whole profit will be taxed. But now the examining team is very clear, 1/4/23 to 31st March 24. So your questions all will be what? Year ending 31st March 2024 or 5th April 2024, right? Now in self-employment, there are three ways in which you calculate your TATP, right? TATP is what? Tax adjusted trading profit, right? Three ways is what? Like this, P&L and balance sheet is given, correct? Sales is there, purchase is there. You look at every income and expense. Sale is completely taxable, correct? Then you have what? Purchase is 7,000 allowable expense, correct? Then you have manufacturing expense, allowable expense. Depreciation on machinery as per books, not an allowable expense, correct? Drawing or salary to owner, not an allowable expense. The law says that drawing or salary to owner is not allowable. You can debit it in the books of accounts, correct? So you start with the net profit as per books, correct? You write that first and then analyze everything. Sales are allowable, correct? Already impact is given, so no need to again give an impact. Purchases allowable, already deducted, no need to do anything. Manufacturing expenses already deducted, no need to do anything. Depreciation on machinery, this is as per IFRS or books. Taxation system has a different way of calculating depreciation capital allowance. So this will not be allowed to be what? Tell me. Be there. Drawing or salary to owner, correct? Law says not an allowable expense. So if you have deducted it mistakenly, add it back. Depreciation on machinery not allowed. Deducted, add it back. So your TATP will be how much? 7,000. Before capital allowance. From this, capital allowance will be deducted and that amount will go to your computation. TATP after capital allowance. Method 2 is what? Tell me. Same type, correct? But net profit as per books. Balance sheet is not given, P&L is not given to you. But they are saying that net profit as per books is so, and all the expenses are done within the books. So you analyze all the expenses, correct? And try to find what? The TATP before capital allowance. Method 3 is most interesting. They will give you net profit as per books is 4,800 and following expenses they have forgot to add to the P&L, correct? Manufacturing expense they forgot. Is it an allowable expense? Yes. So it will be deducted. Sir, depreciation on machinery not allowed at all, sir, and forgotten. Nothing to do. No need to do any adjustment. Drawing or salary to owner, correct? Sir, any whichever way it is not, tell me, taxable, right? Or deductible. And sir, you have forgotten, so do nothing, correct? Have a look. Sales forgotten to be entered, 5,000, right? If this is the situation, 5,000 will be added here, right? Have a look. You have a method. Now see what will happen at times. In the question, you will see property income that we have done or savings income wrongly added into the P&L in the books of accounts. In that case, what you have to do? You have to nullify the effect here. So if property rent is by mistakenly taxed, deduct it. Property expenses are deducted, add them back, correct? Have a look. Property rent wrongly credited here. Savings income wrongly credited here. Property allowable expenses wrongly debited here. So they were deducted, you added them back. Purchase of machinery is a capital asset, correct? Cannot be deducted to or cannot be debited to P&L. Wrongly debited to P&L, added back. Depreciation of machinery not allowable to be a deductible expense because capital allowance is calculated, add back. Drawings add back, correct? Then have a look. If that only in method 3 they had asked, sir, property rent received, you have forgotten to add into the books. Any whichever way it is not going to go into the books. Tax it as property income or savings income and allowable expense also. Have a look. This table you can have a look. We were very optimistic, correct, of learning this. So I have made a table in case you want to go through it, correct? Then completely, now we are talking about what? Sir, what expenses are allowable, what expenses are disallowable, correct? So completely disallowed expense, that means they are not allowable at all. Appropriations, drawing, salary to owner, interest on capital owner, disallowed expense. Capital expenditure, any purchase of capital asset, depreciation, amortization, disallowed expense, right? Instead of depreciation and amortization, you will get capital allowances. Donation to political parties, any subscription to political parties or donation or any what creative work done, anything given to what political party will be fully what not allowed expense at all and will be fully added back if they have been deducted from the P&L. Entertainment expenses, entertainment of employees, fully allowable expense. Entertainment of customer, supplier, party, etc., fully disallowed expense, correct? Then going ahead, excessive salary paid to family member. Excessive salary paid to what? Family member. If salary paid to family member in line with market or commercial rates, correct? Fully allowable expense. If salary paid in excess of what? In line with market rate, then no tension, allowable. But if paid more than the market rate, correct? Then how much ever extra you have paid, correct, will be disallowed expense. Have a look. All amount being paid, reimbursed. Now see, employer, as an employer or self-employed guy, you are an employer. Whatever amount you pay to the employee, fully deductible, irrespective of whether it will be taxable in his hand or not taxable in his hand. Employee taxation will have no impact on employer payments. Employer, whatever is paying to the employee, correct? Like we saw today only, any small gift given to employee, 70-80 pounds. In the hands of employee, it is taxable. Here it is deductible. 40 pounds, sir, in the hands of employee exempt. In the hands of employer, 40 pounds deduction available. Sir, Christmas party, right, expenses, 200 pounds per employee. For the employer, allowable expense because he did for the employee, correct? But in the hands of employee, above 150 pounds, so fully taxable, correct? Have a look. You can solve this question as well, no problem, correct? Then coming to short lease premium, right? Now we have seen already owner taxability. In tenant, what you do? You know how to calculate the revenue component. Revenue component divided by lease period into number of months used in this year. That will be the tenant taxation, and it will be allowed as an expense from TATP till the lease period goes on, correct? So tenant has what? That kind of taxation, correct? And then going ahead, car leasing. If car has CO2 emission of less than 50 grams per kilometer, 100% of expenses allowed on leasing. If car has CO2 emission of more than 50 grams per kilometer, 85% of the expense allowed on leasing or 15% disallowed expense, whatever you want to say. Charitable donations, right? Sir, what if GGAD or payroll benefits for employee allowed the deduction? Charitable allowed the deduction from P&L, that is self-employment, correct? But what are the 4 conditions? The charity is done wholly and exclusively for business purpose. That is business promotion or advertisement. It is a local charity, right? It is in reasonable size, right? And it is a registered charity, correct? If all 4 conditions are fulfilled, allowed as an expense. If any condition not fulfilled, then GGAD will be allowed. Simple, right? If any one of the condition not fulfilled, you can term that as GGAD. If gift given to employee, fully allowable expense. No condition applied, fully allowable expense. When gift given to customer, 3 conditions. What are the 3 conditions? The cost of the gift has to be less than 50 pounds per employee. That means an employer or a business owner giving gifts to the customer less than 50 pounds per customer per year. Gift is not food, drink, tobacco or vouchers exchangeable for goods, and conspicuous advertisement or visible advertisement on the what gift that is given. If all 3 conditions fulfilled, right, full amount of gift to be to customer will be an allowable expense. Even if one condition is not fulfilled, correct? That means let's say you are giving 40 pound gift, correct? But if it is food, that is there, not an allowable expense. Sir, if you are giving 40 pound, it is a bottle, and the logo of the bottle is somewhere below in a dot, not easily visible, full amount will be what? Taxable. No exemption or fully what? Disallowed expense, correct? And then gift given to supplier, family, fully disallowed expense, correct? There are a lot of questions on this. You can solve those. For debts, you have trade debt and non-trade debt. Trade debt, written off from the books, allowable expense, right? Whatever bad debt written off received or recovery of bad debt written off earlier, taxable income, correct? Recovery of bad debt not written off. So I had not written off the nothing to be done, correct? Then allowable or debt allowable as a or bad debt allowed as a percentage of trade debt, that is provision for bad and doubtful debt on impairment of debt, correct? As a percentage of trade debt allowed. So I say that sir, 50,000 pounds is my trade debt, out of which 10% is what I think will be what? Bad and doubtful debt. So 50,000 to 10%, 5,000 allowed as an expense, correct? Non-trade debt written off, right, of non-trade debt is disallowed expense. Any non-trade debt means what? Loan to customer, right? Advance or loan to what? Supplier, loan to what? Employee. All these are non-trade debt. If they don't give the money and you write off the debt, correct? In that case, it is not allowed as an expense, right? But if it is a debtor whose what? Debt you have written off, then it is an allowable expense. If write-off of non-trade debt is disallowed, then recovery of recovery of return of non-trade debt will not be a taxable income. Have a look. You have a lot of questions. Then in impairment, correct? If you have opening and closing balance of impairment, correct? Have a look. Impairment as a percentage of account receivable, fully allowable, but impairment given as opening and closing balance. If opening balance is less and closing balance is more, right? If opening balance is lower than the closing balance, that means provision has increased, that is allowable expense. If opening balance is more, closing balance is less, then it will be a taxable income. You would not see this in any book, my guarantee, correct? My guarantee, you will not see this in any book. Nowhere in any book they even know that what is opening and closing balance. Not in a lot of books you have question. Then trade or professional subscription paid by self-employed. Before we did was trade and subscription or professional subscription of what? Employee. Now this is for self-employed. If made wholly and exclusively for trade purpose, right? Allowable expense. If not made wholly and exclusively, that means if I have a subscription, I am doing ACCA practice, correct? And I pay ACCA subscription fees. It is what? Wholly and exclusively for trade purpose, allowable expense. If not made for wholly and exclusively trade purpose, disallowed expense, correct? Have a look. Legal and professional fees, part 1. Legal and professional fees, part 1 is what? Legal fees or professional fees for chasing debts. Legal fees or professional for chasing debt allowed. So whenever you go to what? Ask money from debtors, right? You say, if you don't pay money, I will do what? Legal case. Allowable expense of legal case. Legal fees or professional fees for defending the title of non-current asset, correct? Allowable expense. If there is a problem, you have some non-current asset and someone says it is my non-current asset, then he says come to court. You go to court, right? Whatever expenses that you incur to defend the title of non-current asset, allowable expense. Legal fees or professional fees for long-term finance for sole trader, correct? If, right, you have to pay processing fees and legal fees while acquiring long-term finance, allowable expense. Cost of registering patents, allowable expense. Accounting fees, allowable expense. Now coming to legal and professional fees, part 2. You have legal fees related to short lease. There are two types of legal fees, initial granting and renewal. Initial granting of legal fees of short lease disallowed. Renewal of short lease, allowable expense. Legal fees related to long lease, correct? Initial granting of long lease, disallowed expense. Renewal of long lease, disallowed expense. So for long lease, anything that is there is disallowed. It will be capitalized in the long lease, correct? But when it comes to short lease, initial granting will be disallowed and renewal will be allowed. Have a look. Short lease is less than 50 years, more than 50 years is long lease. Relief for pre-trading expense, if that expense is incurred within 7 years before commencement of business and it is an allowable expense, both the condition fulfilled, then it will be allowed as a expense on the day of what? Tell me. On the day of what? Tell me. Business starts on the first day of business, right? From commencement last 7 years. Then coming to the part of what? Goods taken from business for personal use. right? Now see, you bought certain, if I'm a mobile shop owner, correct? I bought 100 mobiles, correct? 99 mobiles I kept in the shop. One mobile I took for personal use. The mobile, each mobile is worth 1000 pounds, correct? Then I took the goods out, correct? And actually 1000 pounds I purchased and I sell it for 1200 pounds. What did I do? 100 mobiles into 1000 purchase I did. I sold them at 99, I sold them at 1200, correct? One that was there, I did no entry in the books of accounts, I put up in my pocket. In that case, you have to tax 1200 extra because what? Tell me. Removal is what? Recorded at purchase price. Removal is recorded at any other value other than purchase price, correct? That is zero pay, zero removal at zero. Then full 12,000 or 120,000 here I have given expense, market value is 120,000. Full market value of goods, right, will be taxed. But let's say I say, see, 1000 I got the goods, I took it for personal use, 1000 I will pass the entry, correct? Then in that case, what will happen? Have a look. 80,000 is the purchase price. You did an entry for 80,000. So you did removal entry at 80,000. Then that profit component, right? In our case, 200 profit component will be taxable. But when you say, sir, 1000 may I bought and 1200 may I did an entry, right? And I use it for personal use, no change. Have a look, right? Have a look. This you can give it a try, right? If nothing is given in question, then assume accrual basis to be. See, in property income, savings income, dividend income, default basis is cash basis. But when it comes to or any employment also, I have told you when to tax what. But when it comes to self-employment, right, you have to assume that basic is what? Accrual basis, right? Take a 10 minutes breather, then we will come and complete this part, right? Your cash basis and all those stuff, correct? And then we can go into, after this capital allowances we can complete, and we can complete probably losses. After this, losses are there, losses and other things, right? So cash basis, basic is what? Accrual, right? So come back by 12:06, 10 minutes breather. 12:07 come back. So Are you all back?
Yes, sir.
Quickly, let's start. I hope the speed is okay. Tell me. Is the speed a problem? Tell me. New students, first time students, what do you say? Are you understanding things?
Yes, sir.
Right? Who all do we have more? Tell me. Hina is there. Hina is for the first time, or Hina was my student? Tell me. Hina? Hina,
No,
Rafina,
I have studied from you, FM.
FM. Okay.
Yeah.
Now are you feeling much more comfortable in UK tax?
Yeah, yeah.
Okay. You're done with your UK tax classes, right?
What?
Classes are done, right? UK tax?
Classes.
Okay. Riddesh, what about you? Riddesh is there. Then we have Ruth. Then we have Rafina. Tell me. How is overall experience up till now? Whatever 3 hours we have done. Will this help you in exam? Tell me.
Yes.
Yes. Then can we go ahead? Tell me.
Yeah.
Correct. So quickly, cash basis. Now see, basic is what? Accrual basis for self-employment, right? Now coming to cash basis for what? If in self-employment, if it is a small business, correct? And you have what? Cash basis for small unincorporated businesses, right? Eligibility and criteria. So for you to claim what? Cash basis instead of accrual basis, the eligibility is if nothing is mentioned in question, go with accrual, right? But if specifically mentioned, if receipts are less than 150,000 or if it is mentioned in the question, I am telling you, if nothing is mentioned in question, no, accrual, close your eyes, do accrual basis. But if they tell specifically to use cash basis, then only use cash basis. What are the conditions in cash basis? Have a look. Two major conditions. All receipts and payments will be considered on cash basis, correct? No account receivable, account payable, nothing of that sort will be considered. Revenue or capital expenditure, everything will be considered as what? Allowable expense. But there are two exceptions. What are the two exceptions? One is structure and building, where you'll get SBA, that is structure and building allowance on that, right? And the other is car purchase and running price or running cost of what? Tell me. Car purchase price and running cost will not be an allowable expense. The purchase price and running expenses will not be allowed, right? But you can claim what? AMAP on the business miles driven, right? Have a look. Structure and building will be what? SBA will be available against that. It will not be an allowable expense, correct? Then coming to the part of, now see here, you have to obviously what? Sales done for the year is 125,000. Still outstanding 27,500. Means what? Cash received is 97,000. So in cash basis, I will take 97,500 only. In accrual, I will do what? 125,000 fully. Because sales is done. Money is not yet received. But accrual basis, that will be something that you can do. So here I have done accrual basis and cash basis. Both answers I have found out. Right. Then condition for cash basis, correct? Now what happens? Whenever there is a small unincorporated business and it is a small guest house or a small motel or something of that sort that you are running, right? A small hotel or motel, whatever you want to say, right? In that, what happens? There are 8 or 10 rooms in the whole motel, correct? And out of that, let's say 10 rooms are there, right? 1 or 2 rooms you are using personally, right? So, but what happens whenever electricity expense come up, whenever your food expenses come up, laundry expenses come up, they come up as a whole. Because see, 6 rooms in a motel are rented, 6 or 8 are rented out, and in the 2 rooms, 10 means 2 rooms, you are staying in that 2 rooms, and 8 rooms are rented out. But when the electricity bill comes up, it comes up for all 10 rooms, correct? When the laundry expense comes up, it comes for all what? 10 rooms. Food, you stay in the hotel or motel and have food there only, correct? So it happens what? If bifurcation of private expense is possible. Now see, if you can actually make out laundry expense this much, this much, then great. Private expenses will be disallowed, correct? But if bifurcation of private expense is not possible, expenses for what? Services, rent, food and utilities, then disallow flat per person expense given. Something like this will be given in question. Have a look. Laundry expense is what? 7,000, correct? Or see, electric expense for full premises is 6,000. So what? The person is staying there, right? Then food expense. For car disallowance, if it is there, AMAP will be allowed. Car purchase and car what? Driving cost or whatever, fuel cost will not be allowed, correct? But AMAP will be allowed. If you are staying within the property and you're getting a full bill of one amount, right? In that case, tell me that flat rate expense will come up, correct? But if you can bifurcate the private use expenses, like here your laundry expense is 7,000 and 15% is for private use. In that case, what will happen? No tension, 15 or 25, whatever, correct? That 25% will be disallowed, 75% will be allowed. But for electricity and food, it is for full premise, it is not bifurcated. In that case, you have to ask how many people are living, right? And a flat rate scheme defines that per person private is at 450. So 450 into 4 people, 1800 will be disallowed. Have a look. 1800 is disallowed. Here laundry, 85% allowed. 15% not allowed. This is cash basis, right? Cash basis. Then coming to capital allowances. Let's talk about capital allowances. Can we go to capital allowances? Quickly, let's go to capital allowances. Capital allowances is a basic format, right? Or first, what is the definition of capital allowances, or what is the definition of asset for capital allowances? Plant and machinery both are eligible for capital allowances. Plant has two parts in the definition: active, what? Tell me, active function plus apparatus for business use. Machinery is computer, movable partition, office equipment, all those things. Assets which are not plant and machinery but deemed to be plant and machinery. So what are the two things, right? One is expenses on computer software. That is not plant and machinery, because computer software directly is not a machinery. But if you do any expense on acquisition of computer software, correct? In that case, and cost of alternation or alteration or installation of plant. So a lot of time it happens that you have to install a plant 10 feet below the ground and you have to do alteration to the land, right? That means you have to dig up the hole and all that stuff, right? That will be an allowable expense. Assets which are plant and machinery but not deemed to be plant and machinery. Now see, land is capital allowance is not available against land. Structure and building, capital allowance is not available, but SBA is available. Then coming to capital allowance, right? This is the main pool. Two pools are there, main pool and SRP, correct? In the main pool, right, you have an 18% per annum rate for a 12-month period, correct? Plant and machinery life which is less than 25 years, AIA available. New car with zero CO2 emission, 100% FY available, correct? Plant and machinery life less than 25 years will go. See, any asset which has life less than 25 years will go to main pool. More than 25 years or integral feature of building or thermal insulation or high emission cars will go to SRP, correct? Car which has less than 50 grams will go to main pool. In that also, if it is a new car with zero CO2 emission, then 100% FY or first year allowance will be available to it, right? Second hand zero CO2 emission car, it will go to the main pool, 18%. So this 18% and 6% is nothing but WDA, that is writing down on us. But before the WDA, AIA is available to what? Every asset. What is the AIA? Have a look. 1 million for a 12-month accounting period. If accounting period less than or more than 12 months, pro rata will happen, correct? But AIA available against or not available against car. AIA never will be available against any car, right? Have a look. But available against all other assets, also not allowed against SBA. SBA and car, AIA will not be available, correct? Unutilized AIA cannot be carried forward to next year. No problem. Unutilized AIA cannot be carried forward to what? Next year. Performance or preference of usage will always be first use your AIA against SRP, then main pool, then short life asset, and then private use asset. And last, no AIA available in the year of cessation. AIA, unutilized AIA, carry forward option though is never there, correct? And preference is something like this, correct? So now that is AIA. Then you have something called as so now how the format will be? You will have opening WDV, correct? Then you will have additions. In additions, you will have additions eligible for AIA first preference you will give to SRP, then to main pool, then short life asset, and then private use asset, correct? Then all the additions done, then you have the deletions. After the deletions, what will happen? You will get a balance. On that balance, you will calculate WDA, right? Columnar approach can be followed. Main pool will be one column. Your what? Tell me. SRP will be another column, correct? And whatever AI or that you take or allowances will be calculated and transferred to capital allowance column, correct? Now in the car part, correct? Have a look. 100% FY is available only against new car plus zero CO2 emission. 100% FY, never prorated. It is not monthly. It is no questions asked. 100%. There is no option whether or not to claim. There is an option. So if you don't want to claim FY, claim main pool 18%. But no AI is available against those assets. No FY available in year of cessation. In the last year of business, AIA or FY not available. Correct. Then obviously, if these limits fall, the 18% will be, sorry, your accounting year falls, correct? Then your AI limit will be less than 12 months. AI limit may fall down, or if it is more than 12 months, AI limit will go up, correct? 100% FY will not be prorated. 18% and 6% will be prorated. 6 by 12 and 18 by 12 if 6 months or 18 months. Then car का है drawn one diagram or have I not? चलो कार का let's try to understand, right? Car, have I done car here? Chalo, no problem, but we can talk about car. Now see, 4 type of cars I'll see. One is a zero CO2 emission car, right? It is a new zero CO2 emission car, right? In that case, full 100% FY. That means in first year only full allowance or full depreciation will be available, correct? Then let me go one more step. If it is a second hand zero CO2 emission car, normal WDA at 18% will be available, right? If it is a new or second hand less than 50 grams per kilometer car, then it will go into the main pool. No AIA but WDA available, correct? This chart you can have a look, main chart. I've done a lot of questions. Even if this also you revise the whole notes and go to exam, more than enough, correct? Then if you have a high emission car more than 50 grams per kilometer, then it will go to the SRP. No AI available, but WDA will be available at 6%. On the first 3 cars, WDA at 18%, correct? Now SRP में long life asset, integral features of building, thermal insulation. In integral features, you have generally what your lift, lights, conduits, all those things that are there, that are added would be what? Tell me, integral features of building, right? Then 100% FY done. Then if there are deletions, correct? Deletion of an asset, normally not on cessation. See, deletions can happen in 2 situations. One is what during the business is going on and you sell some asset and buy new asset, correct? In that case, you have to look at amount of deletion, scrap value or deletion amount, or original cost of asset, whichever is lower will be deducted, correct? So original cost or scrap value, because if you sell any asset at more than the original cost, then chargeable gain will arise on that, right? Right? And whenever you are deducting, now let's say there are 10 assets in the pool and you are deducting or deleting one asset, correct? So the whole pool has not ended, correct? Hence, what will happen? If there is enough balance in the pool, great, just reduce the pool amount and go ahead. But if enough balance is not there in the pool, correct, then reduce the balance up to 0 amount. Your pool can never go to what? Tell me. Negative, right? If but only one asset was there and you sold it, then balancing charge or balancing allowance will arise. Balancing charge means what? It will increase your capital allowance or decrease. It will decrease your capital allowance. Balancing allowance means what? It will increase your capital allowance, right? Then you have something called as if assets are sold on cessation or closing of business, correct? If pool balance is greater than sale value, correct? Then in that case, balancing allowance is pool balance. That is, if there is a loss, right, it will be balancing allowance. If there is a profit, there will be what? Tell me. Balancing charge. Yes, tell me, sir, what happened?
So it will be specifically told in the question that there is only a single asset in the
Yes.
Main
Generally,
pool.
it is told that way.
Okay, sir.
Correct. Then no WDA available in year of cessation. In year of cessation, no AIA, no FY, WDA, nothing there. Then private use asset. What is private use asset? One asset that you have bought in the self-employment business and you are using it for business as well as private use purpose. Correct. So in that case, what will happen? Tell me. Mr. A's business, right? Whatever is the private use percentage, right? That will be disallowed capital allowance. So how do you do it? Have a look. See here, 210,000 is the FY, out of which 60% is business use. That much only will be allowed and remaining will not be allowed. But keep in mind, while deducting, you will deduct the full 100% FY, but allowable will only be how much? The business use part, correct? Here also, have a look. The WDA is calculated at 2,700, right? 2,700 here, have a look, correct? But only 70% is allowed. But balance will be deducted how much? 2,700, and the balance will be what? After the 2,700 part, right? Total full WDA will be deducted from the balance, correct? But allowable will only be how much is the business use. See whether you are able to understand. Private use asset. Then small pool WDA. So this balance after what? Additions and deletions, this balance, if it is less than 1,000 for a 12-month period, correct? If balance before calculation of WDA is less than 1,000 for 12 months, right? That is opening WDA plus all additions minus deletion is less than 1,000 for a 12-month period. Write off that balance as WDA and get the pool to zero amount. Write off the pool. Khatam kar do. Correct? That is how things will happen. But if the accounting period is less than 12 months, this 1,000 limit will go down. If it is more than 12 months, it will go up. Pro rating of limit will happen. Then you have something called as short life asset. If an asset has a life of less than 8 years, right? Or if an asset has a life of more than 8 years, it will go, if it is up to 25 years, it will go to what? Tell me, main pool asset, correct? Or more than 25, it will go to SRP. But if it is less than 8 years, you have an option. See, it is basically a main pool asset, correct? But you can show it differently, right? In a different column, and 18% WDA will be available to it, right? That also you have an option if you want to treat the asset as short life asset. If you don't want to treat it, no problem, right? Then if that asset is sold within 8 years, then you can directly loss or profit. If there is a profit, claim it as balancing charge. If there is a loss, claim it as what? Balancing allowance. Here also when you are doing deletions mein what you will do? Original cost or sale value or scrap value, whichever is lower. Here what you will do? Directly you will complete the asset, correct? At what? Original cost or scrap value, whichever is lower, right? And you will calculate the profit or loss. If there is a profit, it will be balancing charge. If there is a loss, it is balancing allowance. If not sold within 8 years and you transfer, you can transfer it back to the main pool and continue as main pool asset, right? There is a good question here on every aspect of SLA, correct? Then last but not the least, SBA, structure and building allowance. What is structure and building allowance all about, right? It is a qualifying expense, right? For new construction, renovation, extension of non-residential building, it will be a eligible SBA. So sir, only new construction building or newly constructed building will have structure and building allowance. Now the examining committee has made it clear that it could be a new construction building, correct? Or it could be a purchase building. If nothing specified in question, it will not be eligible for SBA. But if specifically mentioned in that purchase building has SBA, right? Or you can claim SBA against the purchase building, you can claim SBA, correct? Then what all expenses will be what allowed? Land cost will never be allowed because it is structure and building allowance, not land. Land will never have capital allowance. Leveling of land, allowable expense. Legal fees, not allowable expense. Construction cost allowed. Planning or municipal permission, municipal corporation commission, not allowed. Permission, sorry. Other costs related to construction allowed, right? Then what is the date from which SBA or structure and building allowance? Would it be date of completion of construction or date of building put to use? It will be date of building put to use, correct? Have a look, right? And SBA will be calculated on what? Tell me. WDB basis or your straight line method. It will be calculated as straight line 3% into n by 12, correct? Have a look. Expense is allowable, correct, and not allowable. Rate 3% on SLM basis. Available from date of put to use of building, right? Then there was something called as SBA what? Now what happens? Have a look. If SBA or if any structure and building you made 4 or 5 years you used it and sold it. 4 to 5 years you used it, you sold it off. How would that go about? Correct? That is something that we need to understand. How would that go? How to do or how to take care of that? In that case, what will happen? Right? So let's say 500,000 was the cost of the construction, you allowable cost and everything, right? And you sold it for 600,000, correct? That means what has happened? There's a chargeable gain of 100,000 of the building, right? Now this 500,000, but will the SBA available on 600,000 to the new owner? No, SBA available on 500,000 only. And also when calculating chargeable gains, whatever SBA you have claimed as the original owner will be added as chargeable gains, or the amount of chargeable gain will increase by the SBA claimed, right? And for the new owner, will the new cost of acquisition for SBA will be 600,000 or 500,000? 500,000 only, right? He cannot claim more than 500,000 on 3% only on the original cost of construction of building. So there is a question here, you can have a look. Now NIC is for self-employed individual, class 2 and class 4 employees, correct? Or class 2 and class 4 NIC is for self-employed individual. Class 2 is weekly contribution. How many months or how many weeks you have worked in that business, right? Into 3.45 pounds per week. So let's say you work full year, then 3.45 pound into 52 weeks. But if you worked only 10 weeks, correct? Then 3.45 into 10 would be your weekly contribution. But when it comes to class 4, correct? But in class 2, what happens? If your TATP after capital allowance is less than 12,570, then class 2 NIC won't apply. If your TATP is more than 12,570, right, then 3.45 pound per week you have to pay. Not allowed as a deduction from any income or TATP, right? And to be paid by 31st Jan after tax year end. So for 23-24, it is 31st Jan 2025. Now you have no option but to learn the date. Then class 4 NIC, if your TATP is between 0 to 12,570, 0% class 4 NIC. If your TATP is 12,571 to 50,270, 9% class 4 NIC is applicable, and more than 50,270, 2% class 4 NIC is applicable. Not allowable deduction from any income, TATP, nothing. Payment date for class 4 NIC is payment on account that you have to make. That will be done in tax admin. Mr. A, right? If he has what? Class 2, class 4. So employer, class 1 employer he has to pay. Employee has to pay. Class 1A he has to pay. For what? Employee. Then class 1 employee, what he'll do? He'll deduct from the salary of the employee. Employer from his own pocket. Class 1 employer. Class 1A from his own pocket. Class 2 for himself from his own pocket. But class 2, class 4 not allowed as a deduction for him. Class 1 employer, class 1A employer allowed as a deduction. See how this goes. So that's why I make a what? Comparative table explaining each situation. Correct? Have a look. Makes sense. Then payment date 22nd of each month, 22nd. This will be done when? Tell me. Tax admin for class 4. Class 2, all dates also I have given. Right? NIC. Right? Then you had something called as sole trader. Earlier, till last year, you had basis of assessment as a different chapter. Correct? I told you up to last year, the accounting period could be anything. But from this year, it will be what? 604 to 504. Now what happens? There is a transition in this year. So there is a provision of transitionary profits. Correct? Have a look. Start of business. Correct? Cessation of business. Overlapping profit. Transitionary rule for 23. If a trader has a brought forward, there are two things. One is overlapping profit and one is overlapping profit means what? At the start of the period, a lot of times what used to happen, there used to be overlapping profits, correct? Now you don't need to know the concept of overlapping profit. Overlapping profit is simple. right? It was taxed twice somewhere before. So this year from your taxable profit, overlapping profit will be deducted, correct? So have a look. If a trader has a brought forward overlapping profit from earlier year, it will be deducted from TATP for 23. Overlapping profit 21,000, TATP 76,000, taxable profit will be 76 minus 21. Then coming to the transitional profit. Transitional profit is something in transition. Now, calculation of transitional profit is not there in your syllabus, right? But what to do with the transitional profit? It is either tax full, right? Transitional, see, overlapping profit is taxed twice. Transitional profit is by mistake, it was not taxed, correct? So those profits will be taxed either in 23-24 fully, or you could divide that by 5, or every 20% of that transitional profit can be taxed over 5 years. So have a look. Mr. A has overlapping profit of 27,000. He has in 23 total taxable profit before deduction of overlapping profit of 120,000, including 35,000 worth of transitional profit. So calculate accelerated means what? 100%. So if he does that, taxable 92 minus the 35, or add the transitional profit of 35 and deduct the overlapping profit of 27. Total taxable 100,000. Taxable profit in this case, you only tax 20% of this transitional profit, that is only 7,000, and this will be taxed every year for 5 years, 7,000. Makes sense? Tell me. Can I go to trading losses? Any doubt in, specifically any doubt? Even when you were studying, you had about self-employment, transitional profit, NICs. You can ask. Tell me quickly. Or can I go ahead? Tell me.
Sir, can you explain the 80% and 20% rule of transitional profit? I didn't get that.
See. 80% and 20% rule is very simple. See, let's say there is transitional profit. Okay. I have right now 50,000 ka profit, correct? And additional 25,000 transitional profit. I have two options. Either 50,000 may add full 25,000, बराबर है?
Yeah.
And make it 75,000 taxable, or 50,000 you tax, 25,000 ka 20% you tax this year, again 20 in next year, again next year, third year 20%, fourth year 20%, fifth year 20%. See, have a look. Tax full transitional profit in 23-24, correct? Or tax 20% every year for 5 years starting from 23-24.
This
Correct?
will be given in question.
Yes, transitional profit will be given in the question, and what to do. Whether accelerated means what? If they say accelerated means what? Right now only 100%, correct? But if they say what? 20% every year, then only tax. So what I will do, 50,000 plus 25,000 ka 20% is 5,000. I will tax 55,000. Then remaining 5,000 in tax 24-25. Then 25-26 में 5,000. 26-27 में 5,000. And 27-28 में 5,000. Correct? Like this 5 years it will be taxed. Correct? Anyone else having any other doubts? Tell me. What do you say? Can I go ahead? Tell me.
Yes, sir.
Quickly, let's go ahead. Aja. So quickly, trading losses for individuals, right? There are two situations where trading losses can arise. TATP before capital allowance minus you do capital allowance, right? TATP is positive 10,000, right? And or 100,000, and capital allowance is 120,000. In that case, trading losses can go to 20,000. Or else TATP is only loss before capital allowance, and you add the capital allowance and you get a trading loss. Now, trading loss can never be written into what? Tell me. Will never go to the computation of income or taxes of the individual. It will be recorded through what? The loss memorandum that is there. It will be recorded in what? Loss memorandum, right? Now have a look. Ways in which losses can be relieved, right? There are 3 ways in which losses can be relieved, and there are 5 options. 3 ways. Have a look. 3 ways, correct, and 5 options. 3 ways, 5 options. What are the 3 ways? Sir, I have a loss in tax year 23-24. I can relieve it in current year. I can relieve it in carry it back to last year, that is 22-23, right? Or sir, I can have carry forward as well. These are 3 ways, right? 3 ways and 5 options. 3 ways means what? Current year loss relief, correct? Current year loss relief in current year. Whenever you are doing current year loss relief, correct? That means what? Sir, trading loss of 23-24, can it be used against other income of 23-24? Yes. Right? So what will be there? Sir, I have trading loss of 25,000 in current year, correct? And I have other income of 10,000. So my total income comes to 10,000 minus loss relief. I can claim 10,000. Sir, but I don't want to claim full 10,000. Not allowed. Partial claims not allowed. 10,000 other income, full 10,000 should be used if profit is available. Correct? No partial claim allowed. Sir, then can I carry it back? Yes. If you carry back the losses, correct? Sir, 25,000 losses carried back. I have other income of 15,000. Full to be returned. Sir, I will only do 12. Not allowed. If full 15,000 available, full 15,000 should be utilized against total income. Utilized against both, utilized against total income. No partial claims of losses allowed. Right? If full utilization against total income, then obviously PA, savings income, nil rate band, and everything will be lost. Savings income, nil rate band, dividend income, nil rate band. Because when I say total income, I mean total income of all NSI, SI, DI, all added together. Sir, can I carry it forward? Yes. No problem. But sir, when I carry it forward, can I use against total income or should I use against only trading income? When carrying forward, only against trading income. Cannot be used against total income. Right? Sir, I have 40,000 profit next year. I have 70,000 loss. I'll use only 20,000 here. No, not allowed. Full 40,000 to be used. So, utilize against trading income from same business. No partial what claims of losses allowed. Right? Carry forward loss will be used against the first available profits from the same trade. Losses can be carried forward indefinitely. Right? What are the 5 options? Sir, can I use the losses in current year? Yes. Sir, I don't want to go back. Can I carry it forward? Yes. So first option is what? Use it in current year, but against total income. Carry forward and use it against what? Your trading income, correct? And no partial claims allowed either in current year or in carry forward against the trading of what? Tell me. Or trading profits, correct? Sir, I don't want to use it in current year. Can I directly carry forward? No problem. Directly carry forward, correct? Sir, then option 3. Sir, I wanted to use it in current year, then carry it back and then carry it forward. Allowed. First use it in current year, then carry back and then carry forward. Applied, you have losses that can be utilized and carried forward. Sir, can I first carry back, then use it in current year and then carry it forward? Allowed. Sir, can I carry back and then carry forward? Allowed. 5 options are allowed, correct? Best option, if they tell you what is the best option of relieving losses, they say losses should be relieved as early as possible. So first carry back, then current year, then carry forward is the best option. Right? Have a look. Is the best option available. Right? Option 1, current year. I have given for every option you will find a question here. So if you want to revise losses, this is the encyclopedia of trading losses that is there in front of you. Right? You don't need to go anywhere. It is always preferable to relieve losses as early as possible. Option 4 is the best method to utilize losses. Carry back, current, carry forward. Also, another option is to calculate taxes and the options where you have lowest tax liability. That is another option. But if the question says use the best way to utilize losses, correct? But now, when it comes to maximum deduction from total income, right? This applies only to other than trading profits. Other than trading profits, when you are using losses, correct? It is not allowed, correct, to claim losses, right, against other incomes more than 50,000. First thing, or 25% of what? Adjusted total income, whatever is higher. Have a look here. Here when you are using, have a look. Yeah, have a look. You have current year 35 and 35, 70,000 worth of what? Tell me, losses. Oh, sorry, other income. Against this, right, only 50,000 will be allowed as a deduction. 50,000 or 25% of what? ATI. What is ATI? Total income minus GPPC. In this case, there is no GPPC. So total income is 75,000. 25% of 70,000 or 50,000, whichever is higher, will be allowed as a deduction. So 25,000, 25% of 70,000 is obviously lower. 50,000 is obviously higher. But when you carry back, ab Shanti se, when you carry back, right? Just hear me out, right? Against income from self-employment, you can use full amount that is available, right? But when it comes to savings and dividend, that is other income, correct? In that case, the restriction of 50,000 again applies. Correct? It could be what? 145,000 into 25% or 50,000, whichever is higher. Have a look. 33,750 or 50,000. Here 12,500 or 50,000, whichever is higher. Are you understanding this? Tell me. Any problem here? I don't know whether you understood this when you did study on your own. Tell me. Tell me. Yes or no? Got it? What do you say, Sana? Tell me.
I said understood.
Understood? Hina, okay. Can we go ahead? Tell me. Then,
Yes, sir.
sure. Then, whenever you are utilizing or relieving losses in current year and carry back against trading income, no restriction. Against any other income, max deduction provisions will apply. Right? Then, opening year rule, special opening year rule, trading loss relief. Now, see, whenever you start a new business, obviously there will be losses. Correct? So, the losses of first 4 years can be chronologically carried back 3 years, not only 1 year, can be carried back 3 years. So tax year 22-23 is your start business. You can carry back losses, right? And utilize again. See, you were in employment up to 21-22 and move to what? Self-employment, correct? In self-employment, you have losses. In that case, these losses can be transferred back. And on FIFO basis, they can be what? Tell me, utilized. So first year ka loss can be carried back 3 years. 23-24 can be carried back 3 years. It is 2021, 21-22, 22-23. Then 24-25 ka loss, correct, can be carried back, right? And will be utilized against FIFO basis and can be utilized against what? Total income. Have a look. Done a question for this, right? Obviously, if after utilization still losses are remaining, you can carry them forward as well, correct? That is no question against that. Now, when terminal losses are there, correct, and you carry back the terminal losses, right? When terminal losses is what? In the cessation period, the loss of the last 4 years, last 12 months can be carried back 3 months, 3 years, right? And it can be utilized against total income. Someone asked me a doubt today. So it can be utilized against total income, correct? But it will be on LIFO basis. Means what? From 23-24, it will go to 23, 22-23, 21-22, 20-21. Correct? Have a look. Partnership and LLP, so I don't think even required to do. You can have a look at it once, right? Only capital allowance of what? Partnership is something that you need to see once. The remaining part, I don't find a lot of what? Do you find a lot of weight in partnerships? Tell me. Dekho, losses in partnership also what? Tell me. You have to transfer it to. So now here, one thing to remember in partnerships, correct? 1 or 2 things that you need to remember in partnership. What are the 1 or 2 things? If you ask me, sir, what to remember in partnerships, right? One is what? Your TATP before capital allowance or TATP after capital allowance that comes up, right? Will be divided between the partners, right? But first allocation will be for what? Salary and interest of partners, correct? Salary and interest of partners will be the first option, right? Then going ahead, correct? You will have what? Tell me. Pensions, after that, whatever is remaining in the PSR ratio, and all that addition will be taxable as TATP after capital allowance in each partner's hands, right? Losses also same way, correct? Carry back, carry forward, current year, everything can be done. Now, do we have to go into pensions? Tell me. Or you want to stop here for today? Have a look, tell me. How do we go about with it? Are you all okay with whatever we did? Or was there a lot of friction? You did not understand it? Anything of that sort? Tell me.
Understood, sir.
Got it, sir.
Got it?
Yeah, got it.
Yeah. Paul. Viddesh, what do you say? Arjun?
Got it, sir.
Yes, sir.
So can I do pensions today quickly? Or
Yes, sir.
should I keep
Yes,
pension?
sir.
Yes,
Pension
sir.
and annual
Yes, sir.
allowances are
So
there.
pension ka I have made it pension IST and VAT is in another part. Just have a look. Pension income. So what individuals will get over once pension is done, no? I'll give you this as well. Okay, don't worry. Pensions. There are two types of pensions: occupational pension and what? Tell me. Personal pension, right? Occupational and personal pension. Tax relief available for pension contribution, right? Now see here, a lot of students have a lot of problem. One is a tax relief amount calculation, and one is annual what? Annual allowance that is there. So one will help you to understand how much relief is available, correct? And then take that relief amount and check whether it meets the annual allowance charge. If it does not meet the annual allowance charge, correct? Or if you have done, if tax relief can be claimed extra, correct? Then in that case, a annual allowance charge will arise, correct? AA charge. So you do some calculation, correct? That was gross personal pension. Now what they are saying, if you do not have any income also, still 3,600 worth of pension contribution ka tax relief will be available with you, correct? So what is the tax relief available calculation, right? Gross pension contribution done or maximum annual amount, right? Whichever is lower, but maximum annual amount is what? 3,600 or 100% of relevant earnings. Relevant earnings means what? Employment, trading plus income from FHA, right? That means what? Doing some kind of active function and getting what? Tell me. Things done, right? Then maximum annual amount 3,600 or 100% of relevant earnings, higher of the two, correct? Have a look. 3,600 or 70,000. My relevant earning is 70,000. So higher of the two, 70,000, and lower of 120,000 or 70,000, right? Have a look. Tax relief available. Yes, Tahir, tell me.
Sir, so here this tax relief available will reduce the tax liability or taxable income?
It will not reduce anything, correct? Because it is subject to what? Double A, annual allowance.
Yes.
So what will happen? Have a look. So you did that, correct? And what will happen? Let's say 12,000. Now see, you have made, let's say it is a GPPC. Then GPPC amount, your slab extension and everything will happen, correct or not? With that amount, correct? With the GPPC amount. Then when it comes to what? Tell me. OPC, so it is okay, correct? But OPC may exemption or deduction, whatever it is, it will be that way, correct? At the tax relief amount. Then come to the part of annual allowance. Annual allowance is how much? Tell me. 40,000, correct? Every year 40,000. Current year 40,000, and it will be what? Tell me. You can carry back or carry forward from last 3 years, correct or not? Last 3 years, you can carry forward the annual allowance if you are within the same scheme, correct? If you are in a different scheme, right? If you change your scheme, then annual allowance. So let's say of 2021, have a look here. 2021 you use 35,000, 5,000 is pending that you can carry forward to next year 21-22. 21-22 may now you have what? 40,000 of 21-22 plus 5,000 of last year, 45,000 available, but you use 25,000 only. So now you have what? When you are utilizing, first you will utilize against current 40,000. So now you have what? Have a look. 25,000 from this 40,000, 15,000 of 21-22, 5,000 of 20-21. Then you have 45,000 in 22-23. First 40,000 against your 22-23 income or 22-23 annual allowance, and 5,000 from the earliest, that is 20-21. Then 21-22, 15,000 again will be carried forward. Next year means if I ask you what is the amount that is available in tax year 23-24, I am damn sure this question only comes up in exam, right? 15,000 of 21 and 21-22 and 40,000 of current year. So when max AA amount asked, right? Current year plus the AA available, right? 40,000, right? Plus carry forward of AA of last 3 years, whatever it is, right? This question has been asked so many times in exam, correct? What if now there is an AA charge, right? Annual allowance charge. Whenever, right, there is an annual allowance charge. That means 40,000 is your limit, correct? You have no carry forward, nothing. You do 60,000 ka pension contribution. In that case, what will happen, correct? What will happen? Your deduction will be amount up to or will be allowed up to tax relief in occupational, correct? And the additional 20-30,000 whatever you have done will be taxed after all incomes are taxed and will be taxed at the highest rate, correct? That means after NSI, SI, DI, it will be taxed at NSI rates. After NSI, SI, DI, it will be taxed and it will be taxed at NSI rates. Personal pension contribution, GPPC that you do will be nothing but ANI plus slab extension, and at actual GPPC slab extension will happen, but your over 40,000 whatever is done will be taxed over and above what extension will happen at GPPC amount, but your AA charge, correct, will or whatever is paid over and above the AA limit, correct, will be taxed after all incomes are taxed after NSI, SIDI at NSI rates. That is the problem. You can look at the questions. The questions are there for your perusal, correct? With this, I think last restriction of A. What is restriction of A? If adjusted income is less than 240,000. Now see, your A is 40,000. That limit can also reduce if you are a high net worth or a high income individual. So if adjusted income is what? Less than 240,000, correct? Then full 40,000 AA available. If adjusted income more than 312,000, AA will be 4,000 only available to you. And if adjusted income is between 240 to 312,000, reduction of AA will happen. But sir, what is this adjusted income? Have a look. Adjusted income is what? Net income as per computation plus employee OPC, right? Plus employer OPC plus employer PPC. So I have done a question here, correct? So reduction, how it will happen? Reduction, how it will happen? A available 40,000 minus AI, that is adjusted income, minus 240,000 by 2. That will be reduced. Same like PA, right? You can do. But remember, adjusted income is what? Net income plus employee OPC, employer OPC, correct? And employer PPC. This question is a lifetime allowance. Whenever now see you have what? Tell me. Invested into the what? Pension, right? And you want to take out the money. That will be taxable, but up to first 25%, correct? First thing, lifetime allowance means what? How much you can invest into the pension. The lifetime limit is 1,73,100, correct? If you contribute anything above 1,73,100, whenever you are going to get the investment back, it will be taxable on withdrawal. While investment, it will not be taxable. Correct? While investing, it will not be taxable. But when what? Tell me. You are doing what? Tell me. When withdrawing, it will be taxable. And when normal withdrawing is there, you can withdraw lump sum up to 25%. It is exempt. Above the 25%, it will be fully taxable. With this, I think we are done with what? Pensions. Just go through all the questions because I have done more questions of pension than in any book. Correct? So this also I'll give you as notes. Okay. So
Sir,
with individual parts, yes.
sir, I did not understand what is the tax feature, tax relief feature here. Like first you said
Tax
it
relief
is
gives
subject.
you an amount, correct?
Huh?
On which what? Tell me the amount that will be allowed as a deduction or what? Tell me. Possibly your this slab extension, correct?
Okay.
You can have a look at the question. Still, if you have doubt, you can WhatsApp me. No problem. Okay.
Okay, sir.
So if you have any doubts, specifically any doubts, correct? You are there in the WhatsApp group, correct? You can take my number from there. My number is there. I have messaged you for 2-3 days, correct? You can directly message me from there. Okay. Anything else that you want to ask? I have last 5 minutes with me. If you want to ask anything. For
Sir,
people,
how many questions we have to do of section C? Around
how many?
questions we have to practice.
Practice.
So
Now, if you ask today, 4th is the exam, beta. So I think 3-4 questions a day, if you do 12 to 15 questions, if you can do. If you have not done anything up till now, then 12 questions, 12 to 15 questions you have to solve. Then only will you get a grip of things, no? Right? Or else it's as good as first in, first out, correct? Now see, if you want to plan your next quarter with us, correct? Any skill level paper, 7,500 plus if you do the admission by 15th of what? Tell me, March, right? Then you will get what? 1000 extra of 6500 for what? Tell me. Any skill level paper, right? So once your exam is done on the 4th, correct? We can probably from 5th, I could message or call you. Accordingly, you can decide, right, what to do next quarter. If you are having doubts of what to do next quarter, then you can always contact me. No problem.
So I have a doubt with NIC that
Sorry.
I have a doubt for NIC.
बोलो.
So, like you said, now in exam you get a question that whether to choose continuous employment and whether to go for self-employment. So, in that, if they are going for self-employment, so while calculating income tax and liability in self-employment, do we have to consider class 1 employer NIC also or not? Because
See,
one question,
class 1 employer will be allowed as a deduction. बराबर.
yes.
Class 1 employee का कोई role नहीं है, because you do not have to pay from your pocket. See, if I was an employee, correct?
Yes.
For me, class 1 employee will be deducted from my salary, but no deduction available, nothing. So for me, there is no implication of class 1 employee, employer, nothing, right?
Okay, so only 2 and 4 we will pay.
2 and 4. If I am in employment, right, a self-employment, then for me, class 1 employer is deducted from P&L, and class 2 and class 4 will be paid from my pocket to the HMRC without any deduction.
Okay, so in self-employed, we will calculate, but we will deduct it from TATP.
Yes, yes. Deduct employer from TATP. Class
Yes.
1 employee, you can write the amount because you have to bear it, correct? That means you have to deduct from salary. And class 2, class 4 from your own pocket, but no deduction available. So you have to say that additional tax over and above the tax, NICs will be payable. And one MCQ was asked last time, NIC is not a direct tax, correct? That is something that you have to understand, right?
Sir,
Hmm.
sir, regarding this terminal loss relief, in my notes I've written that it can be set off against TATP trading income. So it is not trading income, right? It is
So it is
total
total
income.
total income, yes.
Okay, okay, sir.
Okay. Okay then guys, I think we've done within the permitted time, right? So I hope you all enjoyed the first day. Tomorrow we'll complete IST VAT first, then corporation tax, and then at the end CG. Or we'll do CG first and then do corporation at the end. No problem. But we'll be able to do all the 4. Tomorrow please be on time at 9 AM, right? So that we can start at 9 AM, right? Any other doubts you have, right? Can we sign off for today? Done?
Yes, sir.
Yes, sir.
Okay then guys, bye bye. We will
Yes,
meet
Bye, sir.
tomorrow 9 AM, correct? Be on time so that we can start on time. Any other doubts, you feel free to message me. I have a class in the evening 7:30 to 10, right? So if I may not reply, correct? So don't take it personally, right?
Thank you, sir.
Sure, sir.
Okay.
Thank you.
thank you, sir.
Hello, bye bye.
Thank you, sir. Bye.
Thank you, sir.
Welcome, bye bye bye.